Sister Dara, I think we have already 110 participants, I think, and it's already 3 minutes, 5 minutes actually. I would suggest we should start.
بسم الله الرحمن الرحيم والصلاة والسلام على نبينا محمد وعلى آله وصحبه. السلام عليكم ورحمة الله وبركاته. It is indeed a great pleasure to welcome you to AAOIFI's public hearing related to 5 exposure drafts of its governance standards. We're holding this public hearing in collaboration with ANSF, ISRA, KNAKS, ADL, and ADL Advisory and Salihan. Let me take you through the agenda of the session. The first 15 minutes is allocated for the welcoming remarks. Then our brother Umar Mustafa Ansari, the Secretary General of AAOIFI, will start the discussion of the 5 exposure drafts. And these are Shari'ah Supervisory Board appointment and composition, Shari'ah Supervisory Board functions and operations, Shari'ah Supervisory Board review and report, and the application of Shari'ah governance principles to Islamic finance windows, and finally, the application of Shari'ah governance principles to Islamic finance subsidiaries or associates. We're going to have a prayer break at 12 p.m. and then we're going to continue the discussion and conclude at 2 p.m. Bahrain time. Now I would like to welcome Dr. Ahsan Lahsasna, the CEO of Salihan Shari'ah Advisory Services, to deliver his welcoming remarks. Dr. Ahsan.
Thank you very much, Sister Azara. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh. Really a welcoming remark, but it is just a kind of appreciation and thanks to AAOIFI for the opportunity to be part of this important public hearing on this important draft. Sharia governance, as you know, it is a very important standards in the market that shape out the decision-making process, the Sharia board operations and appointments, reporting, control functions. It's basically, I may say, one of the hard aspects when it comes to Islamic finance functions, because it determines the status of the Sharia compliance. And I think, alhamdulillah, this is a very also a heavy work today by AAOIFI. Thank you very much for the contributions, which is definitely regarded as very significant because it's contributed to shape out the industry, to create consistency and standardization in practice that drive the industry towards the such global standards. I also appreciate the contributions of Brother Ansari for this good effort and initiatives. And without further ado, I just wish the best to all the Brother Ansari for this the key points highlighted on the governance, and also fruitful discussions for all the members through their feedback and contribution that hopefully it will contribute positively to the improvement and the enhancements of the existing. Thank you very much, and assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.
Thank you, Dr. Ahsan. Now I would like to welcome or invite Mr. Muhammad Mishal, the head of Sharia Review at ADL Advisory, to deliver his welcoming remarks. Mr. Muhammad.
Thank you. Bismillah ar-Rahman ar-Rahim. Alhamdulillah Rabbil Alameen. Allahumma salli ala Sayyidina Muhammadin wa ala alihi wa sahbihi ajma'in. First of all, I would like to thank on behalf of ADL, thank AAOIFI for their ongoing efforts in serving the Islamic finance industry, and also engaging the practitioners and stakeholders in developing the different types of standards, not just governance standards. And we are especially pleased to participate in the public hearing of these 5 exposure drafts of governance standards. And that's because without proper governance, proper implementation of Sharia rules and principles becomes doubtful. And it becomes doubtful in 2 ways. The first one is that the implementation itself is doubtful. And secondly, the credibility of implementation, if it happens, may also be doubted by or may be affected by the public perception. Umar ibn Khattab radiallahu anhu, when he was Khalifa, he wrote a letter to Abu Musa al-Ash'ari, and in that letter he mentioned to him that فإنه لا ينفع تكلم بحق لا نفاذ له, which is translated into speaking the truth is not beneficial if it's not implementable. So here we are asking Allah to help us in supporting AOIFI in this noble mission and to guide us all. And thank you. Hopefully we will have a fruitful and engaging session.
Thank you, Mr. Mohammed. For my welcoming remarks, I'll just mention a few points. Number one, these 6 EDs are the outcomes of AAOIFI Comprehensive Shari'ah Governance Framework project, which aims at establishing rules and principles to ensure a sound and effective Shari'ah governance framework for the Islamic finance institutions. Also, I'm pleased to announce that with the issuance of these 6 EDs, the core principles of Shari'ah governance will be completely covered by AAOIFI governance standards. When it comes to the approach for managing the session, the purpose of the session is to learn from your experience and get your feedback, and therefore we welcome your comments on the Q&A tab. If after this session you still have additional comments, please feel free to share with us on governance@aoifi.com no later than 29th of February. To conclude, this is the second public hearing related to these EDs. We held the first public hearing on 30th of January, and inshallah, we will hold an additional public hearing in Arabic language next month. So this is it from my side. Now I would like to welcome Mr. Umar Mustafa Ansari, the Secretary General of AAOIFI, to start the discussion.
Thank you very much, Sister Zahra, Brother Ahsan, and Brother Muhammad Abdul Nasir. A'udhu billahi minash shaitanir rajeem. Bismillahir rahmanir rahim. Rabbi shrah li sadri wa yassir li amri wahlul 'uqdatam min lisani yafqahu qawli. Ladies and gentlemen, assalamu alaikum wa rahmatullahi wa barakatuh. This is, to be honest, we always say it like as a formality at times that it's a great pleasure. But to be honest, this is one of the greatest pleasures that we are having, alhamdulillah, because it's conclusion of a very long project, which has been continuing for several years. And as Sister Zahra has mentioned, that it completes the primary and the core principles of governance project that we had in our plan for like several years. I would like to thank all the participants to be here today. Alhamdulillah, we can see a number of 150 plus already there. In the last public hearing, I think there were 200 plus or so. So we expect more people will be joining in as it's a long public hearing session. We are very much thankful to our partners because normally when we do the public hearings and we plan them in different time zones, we try to partner and associate with some of the important institutions in those countries, jurisdictions that are in that time zone. Obviously, the event is global, but as a matter of policy, we normally divide the English public hearing sessions into the GCC region timing, the Europe timing, and the Far East timing. Obviously, some people I know and I would appreciate that are attending this event in the odd timings. Some of them actually might be waking up in the night to attend it. So I would like to thank all of you for being available and all of the local partners who have supported us, Saleen Advisory, Adil Advisory, and ISRA. The topic is very interesting. And that is the reason that when we kept the first public hearing, we had some doubts in mind that 4 hours might not be enough. But actually 4 hours were barely enough for completing only the first standard. So while, as Sister Zahra mentioned, that we'll try to hold one public hearing in Arabic, maybe we might need 2 there as well. And also, I'm not 100% sure whether we'll be able to cover all the standards today, remaining 5 standards. Some of you for sure have joined, I can see the names that are appearing in the list. For sure have joined the first public hearing, which was on the first standard of the 6 about the Shari'ah governance framework and the 14 core principles. But some of you might be attending it for the first time. So before starting from for the today's discussion standards, I think since these are linked together, it will be good for me if I just take a couple of minutes to take you through the 14 core principles of Sharia governance that we have defined. From that perspective, if you allow me a minute to share my screen, this is, again, we can take comments on the core principles, but we do not have an intention to open up the discussions which were there last time. So still, we are open for comments. Any comment that you have on these principles, please feel free to mention. But other than that, we will be just like, sort of having a very brief discussion or brief sort of briefing to today's participants about the 14 core principles which are there. So if I directly jump to the principles, and I'm not going to open up the scope part or the objectives part or the definitions. Again, we are open to take any comments. Just to mention, if any of the participants today has any comments on the first of the standards in the series, that is on the Sharia governance framework, to the extent of taking comments from you, we are open for it. And the discussion on this is going on. On a lighter note, I just observed an anomaly in what Sister Zahra said, that we are inviting comments till end of February. That is correct. That was our original plan. But since Arabic public hearing is going to be held in the next month, so maybe we might need to extend this date as well. And in the meanwhile, some of you might be aware that we have just reconstituted our technical boards, which are reappointed day before yesterday. And yesterday, the names were announced and the press release was issued. So from that perspective, it might be like, possible for us to extend the date for receiving comments by a few more days. So I think at least till mid, although there is no formal decision, but at least till mid of March, we can we invite your comments. These are long standards. As a whole, they become like 70-80 pages together. So from that perspective, it might be it might be good that we allow you to provide comments in writing a little bit till a little bit late. And for sure, at least till the Arabic public hearing date, we are open for comments. Now, let's come to the point. What are the 14 principles? The first principle is there has to be a Sharia governance framework. This is standard on which we completed our public hearing in the last session. This standard actually covers all the 14 principles, but does not cover all of them in detail. So rather, it covers several principles here, and other principles it create references to some of the AOIFI's existing standards, which are already there, as I will be mentioning you in due course, and some of the standards that are in the pipeline on which we are holding the public hearing today. So this is the first standard of the 6 exposure drafts, which covers 14 principles. The first principle being there has to be a Sharia governance framework for all Islamic financial institutions, and that Sharia governance framework should be developed in line with the requirements of this standard, particularly the 14 principles. Principle number 2 is that role of regulatory and supervisory authorities is very important, very crucial. Without having a proper regulatory and supervisory mechanism, you cannot implement, enforce, and make accountable a proper and appropriate Sharia governance framework. So the regulatory and supervisory authorities have to play their respective role in this process. Just a quick reminder that please, if anybody has comments, put them in the Q&A tab and not in the chat window. Whatever comes in the chat window, we might not be able to address that. The third principle is Central Sharia Board. Now, if you see, it says it is strongly recommended. It's not mandatory, but it is actually a better practice to have a centralized Sharia board, which should be able to, how I would say that it should be able to harmonize and streamline the Sharia practices within the respective jurisdiction. For sure, the first step has to be like, to harmonize and standardize with the global best practices, that is the AAOIFI Sharia standards. But again, the jurisdiction level issues, the local legal issues that need to be addressed, local mazhab and school of thought related issues that are to be addressed are part of this principle number 3. So principle number 1 and principle number 2 are briefly covered in this standard, but Central Sharia Board related principles are included in AAOIFI governance standard number 8 on Central Sharia Boards. Principle number 4 is that there should be as a part of the institutional Sharia governance framework within the institution, at least these are the 4 important functions, minimum 4 functions. The first one and the most important being Sharia Supervisory Board. So nobody should be confused that by asking a Central Sharia Board, AAOIFI allows or encourages for not having individual Sharia Supervisory Boards. Rather, we believe that the Sharia Supervisory Board for each institution is the centerpiece and the focal point for the whole Sharia governance framework, the most important organ it is. So for us, Central Sharia Boards are recommended, strongly recommended, but Sharia Supervisory Board is mandatory. We don't believe Islamic finance institutions, including Islamic finance windows and others, they should not exist without having Sharia Supervisory Boards. And even we did not allow outsourcing, complete outsourcing of the Sharia Supervisory Board function, although there can be Sharia Supervisory Boards working through consultants, etc. We'll come to that detail later. But this is something that is very crucial. Sharia compliance function, again, very crucial function that must be there in IFIs. Internal Sharia audit function, again, very important function that should be there in the IFIs, and external Sharia audit function. We believe that these are the 4 most important organs that constitute the Sharia governance framework. For external Sharia audit, we have some exceptions that I will discuss when we come to the respective principle. Role of those charged with governance and senior management. We don't believe that Sharia compliance can be handled only through having Sharia governance framework without involvement of those charged with governance, that is the board and board's respective committees and the senior management. So we believe that they have to play their role, rather they must play their role in order to establish an appropriate Sharia governance system and particularly to get it implemented. So those, again, this standard considers, this exposure draft considers the role of those charged with governance and senior management and provides reasonable guidance on that. But some guidance on this area has been provided by earlier AAOIFI standards as well. For example, a governance standard number 4 on audit and governance committee addresses some of the roles and responsibilities. Some of the specific roles and responsibilities are defined in the specific standards, final standards or exposure drafts. For example, they have a lot of responsibilities with regard to the investment accounts related functions. So those are defined in the respective exposure draft. But the overall role and responsibility that they need to play with regard to Sharia governance framework are defined in this standard. Sharia Supervisory Board is the most important organ, as I mentioned, and this core principle that is in place here, that an institution shall have in place an independent, competent, empowered, and adequately resourced Sharia Supervisory Board. This is a single sentence, but in order to define this single sentence, AAOIFI has 4 exposure drafts and standards. Even currently, we have 3 standards, but with the new standards coming up, we will actually be having 4 standards on this area. 3 of them, inshallah, we will be discussing today as exposure draft. The 4th one that will continue is our governance standard number 5 on independence of Sharia Supervisory Board. That one will also be subject to revision in due course, review and revision. That is part of our standard development plan. But these 3 new standards are coming up, which we are going to discuss. So while it is only just one small sentence, but having an independent, competent, empowered, and adequately resourced Sharia Supervisory Board we need to define a lot of responsibilities and authorities and functions that are covered in the new standard. So there are 3 standards that we are going to discuss today as exposure drafts. First one being Shari'ah Supervisory Board appointment and composition. Second one being Shari'ah Supervisory Board functions and operations. Third being Shari'ah Supervisory Board review and report. The 4th standard, as I mentioned, is on independence of Shari'ah Supervisory Board, our GS5, which continues for the time being till the time it is not revised after a proper thorough review. Principles number 7 is about having a Sharia compliance function in the institution. We already have our governance standard number 9 on this function, which is quite detailed and very comprehensive standard that is already in place. So that we are not defining this principle in detail in this standard, rather we are creating a cross-reference to that standard. Principle number 8, internal Sharia audit function. Again, this is one of the functions on which we have a very appropriate and detailed governance standard, that is GS11 on internal Sharia audit already in place. We are already working on development of internal Sharia audit guidelines, detailed internal Sharia audit guidelines about the methodology, approach of risk-based internal Sharia audit function. That will inshallah be coming up as soon. This principle accordingly is not addressed in this standard in detail. Rather, the principle is mentioned here, and it refers to the core to the standard number 11 that is already in place. Principle number 9, external Sharia audit. Principle number 9, external Sharia audit, is in detail covered in our auditing standard number 6, which is on external Sharia audit. A couple of paragraphs are here in this standard. Let me summarize for those who did not attend the last public hearing on this standard. The external Sharia audit standard, that is on the auditing side, is an auditing standard, which means that it mentions how the audit needs to be conducted. But auditing standard by mandate does not say that there should be an audit. The requirement of having an audit is a legal requirement. Normally, it is in the corporate law or in the governance principles. So from the governance principles perspective, having an external Sharia audit is contained in this standard. Now, what is a current position? That as of now, AAOIFI has it as recommended only, but for 3 years from now, AAOIFI suggests that for all public interest institutions are such institutions who are listed institutions or have listed securities other than their shares, or are retail institutions having at least 10,000 investment account holders, unit holders, takaful policy holders, etc. Who, again, the regulators can define a different number for that. But the idea is that public interest institutions must be having a Sharia audit, external Sharia audit. However, this requirement will become mandatory after 3 years of the effective date of these standards, which means that a reasonable margin is provided currently for this purpose. As of now, it is highly recommended. It will continue to be highly recommended for next 3 years. And after next 3 years, for the public interest institutions, it will become mandatory. And for other than public interest institutions, it will continue to remain as highly recommended. Principle number 10 is on Islamic finance windows. Islamic finance windows are an important segment of the Islamic finance industry. AAOIFI's all governance standards generally apply to the Islamic finance windows as well, because our definition of Islamic financial institution includes Islamic finance window. However, We have decided to develop a separate standard on this area. So we will be, inshallah, discussing today the exposure draft of governance standard on Islamic finance windows that clarifies the scope of applicability of AAOIFI governance standards on Islamic finance windows, as well as clarifies with regard to certain specific provisions that are related to the Shari'ah governance of Islamic finance windows only. Further details we will discuss, inshallah, when we reach that point to discuss the Islamic finance windows. With regard to Islamic finance windows, it is also important to mention that AAOIFI recently, last year, a couple of years back, had issued our financial accounting standard 40 on Islamic finance windows as well. So with this governance standard coupled with the accounting standard, this sort of completes our initial plan with regard to the improvement in practices of the Islamic finance windows across the globe in the Islamic finance industry. Principle number 11 is related to Islamic finance subsidiaries and associates of conventional financial institutions. This is again one of the important areas. While Islamic finance subsidiary and associate itself as being a full-fledged Islamic financial institution is subject to all Sharia governance requirements of AAOIFI's governance standards. However, there are certain specific governance and Sharia governance issues and challenges which are related to Islamic finance subsidiaries and associates, and that's why we decided that a small standard in this area, not a very long or detailed standard, but a standard which focuses on the core areas of and issues related to Islamic finance subsidiaries and associates that should be included. So that is again one of the standards that we are going to discuss today, inshallah. Principle number 12 is about considerations related to business model and stakeholders' interest. These are some specific considerations. Most important of them is proportionality, which means that a one-size-does-not-fit-all approach should be applied, and some flexibility should be allowed by the respective regulators in line with the proportionality considerations that are provided in this standard. And obviously, some flexibilities are provided within the standard itself as well. Principle number 13 relates to applicability of different sectors, which clarifies some specific requirements with regard to certain specific sectors. Principle number 14 talks about transparency and disclosure, and with regard to some of the specific considerations related to certain specific markets, industry segments as well, like the Kaful and Islamic capital markets. So with that, I do not want to go in detail about this standard because this has been already discussed in the last public hearing. But we keep, we can have a quick discussion with regard to this one. If we can have very quick discussion with regard to this standard, if we have any comments from the market. And now I can see, mashallah, 208 participants are already there. So this is so good to have to see that, mashallah, the stakeholder interaction in our public hearings, providing comments on our standards. Now, it needs to be highly appreciated, and I'm sure more than half of these are the people who attended last public hearing as well. So we would like to thank you for devoting your time and providing comments for this public hearing, which is one of the very important steps of the standard development process. I quote this thing most of the time that our ex-chairman of the governance board used to say. He was ex-governor of the central bank, Dr. Ishrat Hussain, and he used to say that standard setting is not a process that you can complete in a boardroom. You cannot just sit in a boardroom and write a standard. For standard development, you need to have the right interaction with the stakeholders. And we are so much thankful to all of you that you become part of this standard development process by attending these public hearings. So I just opened discussion on this one. We'll take some of the comments. There is one anonymous attendee who has come up with several comments. So first thing, I always request that all of you who attend please always mention your name, because your comments are important to us. We take note of all those comments and we take them to the working group and the board. Every comment that is received is taken to the working group and board. Again, for sure, the working group handles all the comments and board addresses only the significant comments. But every comment that you provide is taken to the working group and the board. And for that, it is always better that if you can kindly rename yourself. So now we have three comments here. Assalamu alaikum. Thank you for important work on developing this standard. Thank you very much, and you are most welcome. Please see three suggestions below. One, important to clarify by stating in the standard that the internal Sharia audit department is independent and separate from Sharia compliance department to ensure Sharia governance effectiveness. Absolutely correct. No difference of opinion in this part. It is already covered in our governance standard number 11 very clearly. If you want this thing to be addressed in this standard, if you see, we have just mentioned one single line and we just created one single paragraph and we created a cross-reference to that standard. If you read our governance standard number 11, which is on internal Sharia audit, and governance standard number 9, which are on Sharia compliance function, they clarify this thing very clearly. Still, we take your comment positively and we'll see if the working group feels that it is important to clarify here. Now, coming to your comment number 2, important to clarify by stating the standard that whereas the Sharia compliance department is an ex ante function, the Sharia audit department is an ex post function. Again, an excellent comment, no difference of opinion on that. And actually, with more or less with similar wording, it is included actually in our standard. But I would highly appreciate your comment. It speaks of your very well understanding of the concepts of governance. So we will just see and we'll take it to the working group that whether they feel it is enough to have a reference to the respective standards, or we need to clarify it here somewhere in this standard, or maybe we can consider provided a basis of conclusion on this part or some other guidance on this part. But your comments are highly appreciated and fully agreed as far as your comment is concerned. But whether it should be part of this standard or not, this would be the prerogative of the working group and the board to decide whether they want to put it in this standard or they feel that the reference to the respective standard is enough. Your third comment is about important to clarify by stating in the standard under role of those charged with governance and senior management, oversee implementation of Sharia related recommendations to improve Sharia governance by periodically, quarterly requesting the submission of internal Sharia audit reports by the internal Sharia audit department and requesting annual Sharia board reports by the Sharia board as well. I think again, the crux of the recommendation is agreed. However, number one, we cannot put in the responsibilities of the senior management. We can put it only in the responsibility of those charged with governance. Senior management cannot ask any report from the Sharia boards, and they cannot ask any report from the internal Sharia audit department. Internal Sharia audit department is independent of management and they report to audit committee, audit and governance committee, with a dotted line reporting to the Sharia board. So it means that similarly, the Sharia board is not reporting to senior management, even it is not reporting to those charged with governance. As per AAOIFI standard, it is like, the prerogative of the General Assembly to appoint, that is the shareholders, to appoint the Sharia Supervisory Board. And the reason is that we want to give Sharia Supervisory Board a stature equal to the Board of Directors with regard to Sharia matters only. For sure, the operational and strategic matters are with the Board of Directors, but the Sharia matters are with Sharia Board. And we don't feel that Sharia Board is subordinate to them. So we would not be putting about this thing as requesting, but your comment is well taken. We will actually see and evaluate and map what is written already in the standards And I personally agree with you that overseeing the implementation of Sharia-related recommendations is a must. That must be part of their responsibilities, and actually it is part of their responsibilities, even as per this standard. But about requesting the reports, I think it will not be a good idea. But maybe we can ask the Sharia Compliance Department to prepare implementation reports on the internal Sharia audit, external Sharia audit, and the external Sharia audit, even the Sharia board, and even the regulator if they have raised the observations. So what we can do is that we can ask periodic submission by the Sharia compliance function on the implementation reports to the senior management and the board. The responsibility of implementing and ensuring that implementation has been done is already in governance standard number 9 with regard to Sharia compliance function. We will see the wording there, and maybe we will provide some basis of conclusion on this point, that since it is covered in other areas, but this matter still needs to be clarified, that they need to submit the implementation reports, but we cannot put a direct reporting request from the internal Sharia audit and Sharia board to the senior management, and from the Sharia board to even to those charged with governance. We can have the report from internal Sharia audit to those charged with governance, which is again, I would say, is principally covered in standard number 11, but we need to clarify this point somewhere. And we fully actually agree with your observation. As I mentioned, the original observation about implementation supervision, that is the key. That must be there. Thank you very much for an excellent actually comment, and these are well noted. Okay, now I can see a lot of comments coming in. So let me go one by one. There is Brother Fawad Muhammad. Good morning and Assalamu alaikum. He says that I'm working as CFO in a financial institution with expecting to open Islamic finance window from 2025 to 26. I'm not having a specific question, just require guidance to get proper skills to be certified Islamic banker. Brother Fawad, AAOIFI itself has its own capacity building programs in multiple areas. I would suggest that if you can just write an email to us, and we will update you about our upcoming calendar of events. Probably this year, we might be holding nearly 20 to 22 workshops during the year, and maybe roughly 20 to 20 workshops as a part of our capacity building week, which will be there with the annual AAOIFI Islamic Development Bank conference. So there will be around 40 workshops or so on the AAOIFI standards mainly. And we already have our own Islamic finance fellowship programs. Particularly as you are working as a CFO in financial institutions, I would like to suggest that if you consider pursuing AAOIFI's CP-FAST program, Certificate of Proficiency in Financial Accounting Standards program, which is on AAOIFI Financial Accounting Standards, and the Certified Islamic Professional Accountant program. So I would suggest if you can write to us, maybe you can just drop an email to me at oansari@aoifi.com, and I'll get you connected to my relevant colleagues who can guide you on this part. Some of our fellowship programs are now part of the fit and proper criteria in some of the countries, including Bahrain. Some other countries, again, we don't need to have a list of that, but some other countries have recently added it in the fit and proper criteria. And it will be coming, we hope that more countries that adopt our standard will be coming up with some sort of fit and proper criteria on this part. With that, since it is not directly related to today's discussion, I'll just stop here. And further guidance and discussion, I'll suggest that we can have through offline discussion. If you drop me an email at oansari@aoifi.com, I'll get you connected to my relevant colleagues. Thank you again, Brother Fawad Muhammad. We have comment from Brother Nasir Baijaja. Assalamu alaikum, brother. This is Nasir Soleh Baijaja from Commercial Bank of Ethiopia. CBE Noor Interest Free Banking Division. Brother, this is great to have you here. You know, every time when people join from the newer jurisdictions having Islamic finance and the newer jurisdictions having, you know, connection with AAOIFI, it's always one of the greatest pleasures for us. You are most welcome here. This is your own organization. So your question is that there are presentation with detailed implementation of a standard on Sharia compliance function and Sharia internal audit. Brother, for the standards, you need to just refer to the governance standard number 9 and governance standard number 11. With regard to the internal Sharia audit, inshallah, as I mentioned, we are already working on a set of detailed guidelines for the internal Sharia audit as well. As AAOIFI, we are doing some sort of advisory and certification with regard to the internal Sharia audit function as well, and you can approach us directly for that. We do not provide the internal Sharia audit service, just to clarify, because that may create a conflict of interest for us. What we do or what we propose to do is evaluation of the internal Sharia audit functions that the institutions have and providing guidance to them in line with our own governance standards and in line with other market best practices. So we suggest on this part, we also suggest that that the institutions across the globe for internal Sharia audit, they should embrace technology. They should go for the Sharia audit softwares, etc. as well. So these are the areas where we are willing to provide some guidance, some support. You can approach us directly for further details. With regard to the main guidance on these two functions, you need to refer to our governance standard number 9 and governance standard number 11, which are always available on our website. Thank you very much, Brother Nasir, and you are most welcome here. And it is a great pleasure to have people from those parts of the world from where people earlier did not have connection with AAOIFI. Thank you very much for being with us. The next comment is again from anonymous attendee, and I'm not sure whether it is the same anonymous attendee or somebody else. So that's why I always request that if you can kindly rename yourself. If a window only offer financing products without running any form of liability gathering, for example, deposit taking, there would not typically be a requirement to segregate funds per se. It is an excellent question. Our answer is no, we believe there has to be a full segregation of funding and everything. The detailed answer will be there when we go to the Windows standard, inshallah. So while I have answered this thing very quickly and briefly, but detailed answers to what are the AAOIFI's requirement with regard to that are covered in the exposure draft for this one, and also the financial accounting standard number 40, which is already there. So we'll come to that, and then we will explain some of the queries. Even we received some of the queries from the market as well. So I'll try to respond some of them, and maybe those queries may be considered to be clarified before finalizing the standard. Sister Zahra, if you can just make a note of this comment and the comments that we received as in form of queries that we discussed a couple of weeks back. I think those things might need to be clarified in the body text of the standard or the basis of conclusion if our working group agrees. So I think those queries and this comment must be addressed in the working group, inshallah.
Thank you.
Next comment is Brother Nasir Soleh Bajaja has mentioned that he is Sharia manager Sharia compliance and quality assurance. And so as I've already welcomed you, brother, it's always a pleasure to have you here. Now let's move to the next question. The comment is from Brother Sheikh Muhammad Isa. What is an effect on Islamic finance of a country in which the mode of some scholars is we are not bound by AAOIFI standards? Honestly, I don't know what the comment, how should I answer this comment? Okay, let me answer it. AAOIFI is an institution which is bound to provide standardized practices for the global Islamic finance industry. So we are bound to do this service to the industry. Nobody is bound to follow our standards. But yes, we are working with more and more regulators around the globe. Now, answer to your question would come in two situations, differently in two situations. First situation is that your country or jurisdiction adopts AAOIFI standards officially, like Bahrain adopt AAOIFI standards, Sharia standards as part of law. There is a long list of nearly 24, 25 countries who adopt our standards fully. And then there is a long list that follow our standards as guidelines or partially adopt our standards or develop their own standards based on our standards. So if we put it all together, there are nearly 40 plus, for nearly 44 about Sharia standards. But this is not only the situation. There are some Sharia considerations which are included in AAOIFI's financial accounting standards as well. And that is why when AAOIFI defines the hierarchy of Sharia principles and rules, we go by, number one, Sharia standards of AAOIFI. Number two, country Sharia regulations. Number three, central Sharia board rulings. Number four, Sharia considerations in financial accounting standards of AAOIFI. And number five is the Sharia supervisory board of the respective institution. Now, this is the hierarchy that applies if the country follows AAOIFI standards in full spirit, but in some situations, the hierarchy may exactly not be the same. So where this hierarchy is applied, obviously any scholar, if he says it, he is not in compliance with the respective laws and regulations. And again, this is a situation which put the institution at risk. So this is one situation. Now let's go to the other situation where AAOIFI standards are not binding, not legally required. Still, I would submit one thing. Anybody, any scholar around the globe who says that I want to have an opinion different than AAOIFI Sharia standards, he must have very strong, valid arguments to nullify the AAOIFI's opinion and justify his opinion. While Sharia has flexibility, and there can be situations, particularly with regard to the mazhab prevalent in that country or the mazhab or school of thought that that scholar himself follows, it is quite possible, but it will be still, I would say, not an easy task for anybody to justify that AAOIFI's view is wrong and their view is correct. The only most justifiable situations will come in two situations. One, where they have the empirical evidence available that what is being, the way things are being applied in that country or jurisdiction are not addressed by AAOIFI appropriately, or if the mazhab or the school of thought is different. But again, I would say that AAOIFI Sharia standards are like a consensus, like an ijma, and going against the ijma, particularly if it becomes a Shaz Rai, it should be avoided. It is against the overall benefit of the industry. It is against the benefit of the respective jurisdiction for growth and development of Islamic finance industry. It is against the long-term objectives of growth and reputation of Islamic finance industry. So to be honest, there are two situations, as I mentioned. If the country requires AAOIFI standards legally, obviously the scholar cannot have that argument. Obviously, they need to be they need to the hierarchy of Sharia compliance as per the respective regulations need to be implemented. And where AAOIFI standards are only voluntary or not, at least not legally binding, still they must have very strong justifiable reasons and evidence to support their view, which in most situations won't be easy. But again, we don't say that it is not possible. Yes, it is possible in certain situations to have a specific view against AAOIFI views in a specific jurisdiction because the mazhab or the school of thought prevalent in that jurisdiction has some different view with regard to certain matters. Is still our suggestion, as I mentioned about the hierarchy, our suggestion is that you must still do it at the country level, not at the individual scholar level. And that is why we mentioned that the hierarchy should have AAOIFI Sharia standards and then the country Sharia regulations and then the Central Sharia Board rulings. And in the end, we put that where these things are silent or these things need interpretation, then the role of the Sharia Supervisory Board of the respective institution kicks in. So again, we highly respect everybody's view as individual scholar. We highly respect them as individuals. But the benefit of the industry is in standardization and harmonization. If I move from my country and come to Bahrain, I should be having a satisfaction that the same set of principles applies here and I can rely on the implementation and all of it. Same applies if I'm in Bahrain and I want to do cross-border transactions with UAE, with Malaysia, with Saudi Arabia. Obviously, I should be able to have a confidence that the standards and the practices applied across these jurisdictions have a harmony and I can work on them on a standardized basis. And one last thing, because at times people say that AAOIFI Sharia standards are strict, I would like to emphasize again and again that standard setting is about creating an ijma. It is about creating the practices on everybody that everybody can accept. So if half of the scholars say that something is halal and half of the scholars say that something is haram, I'm just putting an analogy, you cannot have a standard based on that and you cannot have public confidence on this thing. So whatever has consensus of the majority or the vast majority that this is halal, that is the basis of creating the harmony and standardization. I am sitting here, I don't believe in some of the products being followed by some of the market participant banks and institutions. I don't have confidence on some of the sukuk and other products because they don't follow the AAOIFI standard, even if they follow the fatwa of the respective board. But the problem is, as a person, individual person, if I want to invest in those instruments, I will have doubts about that. This thing can happen only when you try to create a consensus on something that is actually accepted by majority. I think I have taken a lot of time on this issue, but thank you for raising a very important issue. Just one last thing I would like to mention, that we have defined Sharia principles and rules in this hierarchy like 4 or 5 years back, and now till now we are consistent on this. And I can tell you that having a uniform set of Sharia principles and rules by this hierarchy is something which is crucial to have Sharia governance. For having Sharia governance, you need to define what is Sharia. What is Sharia is not what every individual stands up and says that this is Sharia. Sharia for an institutional framework, for a country level, for a global level, industry can be only something on which the vast majority has a consensus and for which there is a standardized implementation mechanism. If you don't have it, then I can tell you that the long-term eventual growth will be difficult. And I'm really sorry, at times we have to learn from the conventional. There are a lot of things on which the conventional world has consensus. At least the vast majority has consensus. And they try to get those things standardized for the overall benefit at a global level. And unfortunately, we as Muslims are unable to identify the common grounds. So this is something that industry shall be established based on common grounds, not based on individual views. I'm sure I have taken too much time on this issue and I might have bored some of the people because this issue has been discussed earlier as well. So from that perspective, I would like to just apologize for taking too much time. And I know that today, again, we are having a very limited time to address so many issues. And but this is good that we are having so many questions coming up. Actually, it's becoming a very interactive session, and that is something that is what we expect. Anonymous attendee again, many institutions who operate Islamic window have outsourced the SSB function to some highly reputable institution. Is there now suggestion that all SSB need to be organic, that is not outsourced? I think we allowed outsourcing in a specific manner while keeping full mandatory requirement for smaller institutions considering the size and nature of operations and the jurisdiction related issues. But on an overall basis, we did not allow the SSB function to be completely outsourced. And still, there can be outsourcing options, that there can be common people coming up by the service provider, but those individuals need to be identified. So it cannot happen that I say that I appointed ABC company as Sharia board. Rather, ABC company can provide 3 names of Sharia board members who become my Sharia board. So it is sort of outsourcing, but not complete outsourcing. Complete full-fledged outsourcing generally is not allowed. But again, this is something that we need to discuss in the appointment and composition standard. Thank you very much for a good question. Further details will come when we discuss. Is it suggested that the head of Islamic finance, head of Islamic window need to be in charge of all commercial relationship matters regarding the Islamic finance activities and not only responsible for structuring of products and management? I think it is a bit early question. When we reach this discussion, we'll inshallah go there. I'll keep this question open. Brother Sitwat Rizvi has raised a question. Welcome, brother. Reference to Principle 9, can you please further elaborate public interest institution with the help of a few examples? Brother Sitwat, I summarized about the definition. Definition is included in these standards as well. What I mentioned is that a public interest institution is either it is listed institution, so it can be a investment bank which is not doing retail business, but it has listed securities, either listed shares or listed sukuk. So it becomes a public interest entity because common man may have investment in that. With regard to the retail institutions, we said that general retail institutions shall be included in it, particularly if they have more than 10,000 stakeholders. The idea is that we believe that 10,000 is a good enough number to make it considered it as public at large. So if you are not a retail institution, you are a wholesale or a limited scope institution, you do not have 10,000 plus stakeholders, and you do not have publicly traded securities like shares, sukuk, etc. In that situation, you are not a public interest institution. In other cases, you become public interest institution. So a retail bank, for example, in most cases will have more than 10,000 accounts, and it will become a public interest institution. A small investment bank, although it may be small, but it may have limited operations, only limited investment banking activity, but it may have listed securities, so it become a public interest institution. There can be an unlisted takaful company, which is although not listed, its securities are not listed, but if it has more than 10,000 policyholders, it becomes a public interest institution. So it is like this. And again, a little bit flexibility will always be in the hand of the regulator to define that. Thank you very much for a good question. I hope it is clear. We have a comment from Brother Amiri Anwarul Haq. Is it necessary for Islamic banks to have both a board of directors and a Sharia board, even if the board members possess diverse expertise in various fields, and the Sharia board members have a range of expertise such as Sharia, accounting, law, and others? Brother Amiri, excellent question. And the answer is, if you do it, independence will not be maintained. Means that the Sharia board should be independent of the business decisions. Means that if you are putting both of them in the same board, board of directors has a mandate of operations, profitability, strategy. Sharia board has a mandate of maintaining Sharia compliance. These both mandates at times become conflicting with each other. And that is the reason we believe both of the boards must be separate. Board of Sharia board must be independent. That is the first criteria. If they are not independent, then it means that the decision making with regard to Sharia matters will become jeopardized. And this is one of the most crucial elements that we are trying to endeavor to enhance the independence of the Sharia board through these standards, and maybe with the revision of the upcoming revision of the Sharia independence of the Sharia board standard as well. Thank you very much, Brother Amiri, for an excellent question. I think you got the answer. Quick answer again. Independence is the key, and keeping them both in the same will not keep independence, because Sharia board will become part of, or the Sharia advisors will become part of the strategic and operational decision making, which is against the mandate of Sharia compliance. Thank you very much, brother. Brother Fawad has provided his Gmail, his contact number. Brother Fawad, my request is if you can just drop an email. Okay, thank you very much. We have a comment from Sister Cynthia Aratu Abange. Assalamu alaikum. She's from Cameroon, and most welcome. Please, when are exams for Certified Sharia Auditor English version scheduled? To be honest, a good question. It will take a little bit time because we launched the program in Arabic already. The English translation of the question bank and other things are in the pipeline. We are hopeful that it will be launched within next few months, inshallah. Thank you very much for having interest in that, and for that, just keep in contact with our colleagues. I think if you can just, Sister Zahra and Sister Alia, if you can provide the contact details of the capacity building department for the benefit of all colleagues, it will be good if you can provide contact details of particularly Sister Zainab and Brother Maurice in the capacity building department. Thank you very much for being here with us from Cameroon. And, you know, people joining from these different parts of the world actually gives us a real impression that now AAOIFI is turning into a really truly global organization. Alhamdulillah. Thank you very much for being with us. We have comment from Brother Junaid Amanullah. Is there any update regarding the implementation of AAOIFI standards in UAE? Brother Junaid, thank you very much for being with us. You are always welcome here. The quick answer is that AAOIFI Sharia standards are mandatory, and actually UAE Central Sharia Authority is actually focusing on its implementation as well. So that is one part. With regard to, maybe your question might be with regard to the Takaful, etc. as well. There are different regulators in UAE adopt our standards at different level. We are in contact with some of them on a very regular basis. With some of them, obviously, our contact is not that much active. But we believe that UAE is moving, inshallah, in the right direction. Particularly the Sharia matters related to insurance also might be coming under the Central Sharia Authority. That is my personal understanding, which means that more standard adoptions would be coming up, inshallah, in UAE. I think that the adoption of the current Sharia standards in general banking practices has brought in significant improvements in the UAE banking market already, and we are looking forward towards further improvements as well. For all the participants who are here, for your benefit, I would like to mention that AAOIFI develops every 2 years develops a very comprehensive report on AOIFI footprint. AOIFI footprint report 2022 based on 2020 was published in 2023, which is available on AOIFI website. If you want to know about different jurisdictions as to whether and to what extent will they adopt our standards, and what about different regulators within those countries, you can have access to our to that information on the AOIFI website through downloading the AOIFI footprint report 2022. Thank you very much, Brother Junaid, for being with us. Anonymous attendee again. May I inquire about, I'm sure it is not one anonymous, it is not only one anonymous attendee, maybe some questions are coming from one single person, but I can see another one coming up with as a new question as well. May I inquire about the responsible party or department overseeing the promotion and remuneration increases for internal Sharia board members? Sorry, I'm a bit confused about your question. Are you talking about internal Sharia audit department, or you're talking about Sharia board? Let me quickly answer. Internal Sharia audit function is reporting to audit and governance committee, and they shall be defining, doing their appraisal, and their remuneration shall be defined. They have a dotted line reporting to the Sharia board also, so the Sharia board need to be consulted for the purpose of such evaluation. That applies to internal Sharia audit department. Now, coming to Sharia board members, we have defined in our standard, and I'll come to that later, that the authority to appoint the Sharia board is the General Assembly of the shareholders, and General Assembly of the shareholders may authorize the board of directors with the limits for the remuneration, and based on that, remuneration may be time to time updated by the board of directors for the Sharia board. But that the appointment and the limit authorization is by the General Assembly of shareholders. There is another, I believe this is the different anonymous attendee. Assalamu alaikum. I follow the activities of AOIFI. Does this organization offer free courses? So I don't know whether it's a brother or sister, but a quick answer is, number one, AOIFI offers lot of free programs regarding awareness advocacy. We conduct more than 30 or between 30 to 50 public hearing sessions every time, which are always free. We have at least 2 conferences in Bahrain, which are always free. Our roundtable seminars mostly are always free. However, we have our own capacity building programs as well. The capacity building, again, you need to understand that AOIFI is doing a huge task with regard to development and implementation of these standards, for which AOIFI needs some sustainable sources of revenue. Capacity building, while on one side helps us in developing the necessary market resources for implementation of the standard, which is the qualitative aspect, but capacity building programs also provide sort of a sustainable source of revenue for AOIFI as well. So our capacity building programs, including our fellowship programs and the training workshops and capacity building workshops, etc., whether physical or online, are not free. However, the members of AOIFI, the regulators who work with AOIFI, including regulatory members and other regulators, and AOIFI's fellows, they all have free seats on our capacity building programs according to a policy. But a common person, if they want to attend our programs for free, they have access free to all of our public hearing events, which are for sure about awareness about our program, our standards. They have access to all our conferences, including physical conferences in Bahrain and additional conferences that we are doing globally with other partners, and we are planning to enhance those global conferences. They can attend some of our roundtables and workshops, which are also free. But again, some of these are based on invitation only. So this is a summary. Not everything is free, but obviously a lot of activity we are doing is for free, and you need to appreciate and understand that the whole activity that AOIFI is doing need to have some sustainable revenue sources. So for sure, while we would love to have more and more free training programs and capacity building support, but at the same time, we are afraid that our current financial resources do not allow us to do that. Brother Sheikh Muhammad Isa has another comment here. Thank you, Brother Ansari. I'm a Sharia scholar with Center of Islamic Finance and Compliance and your partners in Tanzania. Brother Sheikh Muhammad Isa, we are so much happy to work with your organization in Tanzania, and we are looking for further work there. So you are also you are also in the People's Bank of Zanzibar Sharia Advisory Committee. We hope Tanzania has huge potential for Islamic finance, particularly in the Zanzibar region. And we believe that a lot of activity needs to be done. So we are open for further collaboration with you. Thank you very much, brother, for being with us here. There is comment from Brother Muhammad Tahir. Is it mandatory for the conventional banks purporting to operate on Sharia compliant to acquire Islamic system for their daily operations? Brother Tahir, I am not very clear about your question on the Islamic system. Are you talking about the core banking and the fintech and the financial technology solutions, or you are talking about something else? So can you kindly clarify further your question before I can answer it? There is from Brother Najibullah Omari from Afghanistan, advisor to Conversion Center. Assalamu alaikum. Thanks for the efforts you have made with regard to AAOIFI's governance framework. As you know, currently works on Islamization of banking sector in Afghanistan is seriously taking place on the governance side sometime following issues raised. Adding Deputy CEO on Islamic affairs on every bank for ensuring Sharia principles, placing SSB permanent structure of every bank to handle Sharia matters. Your opinions? The first thing is about adding Deputy CEO. We believe that even the CEO should be aware about what is needed. And actually, at AOIFI, we believe that the most important capacity building that needs to be done is at the top level. And I would like to mention that for Afghanistan, one of the first bank in Afghanistan, actually, we conducted a full 1 week sensitization program for the board of directors and board of supervisors for and the key management for the understanding of Islamic finance operations. So actually, the board of directors, even you will find in this standard, this set of standards, that we have put a very clear requirement that those charged with governance and the senior management must get appropriate information. So appropriate knowledge and expertise about Islamic finance. And for that, they must have a sensitization program as a minimum. So from that perspective, my personal point is that if you feel that having a deputy CEO will help, give it a try, but it may result in internal conflicts on decision making. The real solution, particularly considering that you are converting the whole economy and we are praying for your success in this effort, we would like to mention that you need to train each one of them. It would not be good enough that this is the person for Sharia matters and this is the person who is decision maker, because it can create conflicts. And that is the reason that AOIFI never suggested anything like this. AOIFI suggested that every senior management member must be adequately trained about Islamic finance. And that is the solution. As AOIFI, we are willing to work with you. We are already working with the Central Bank of Afghanistan, that is the Afghanistan Bank. And we were thankful to His Excellency, the Governor, who visited for our last conference as well. So we are planning to enhance further work with you and with Afghan Banking Association and all that. With that, our suggestion is you need to develop capacity. Only adding deputy CEOs might create conflicts in decision making and create an internal politics. Rather than that, everybody need to be trained. Second part is placing SSB permanent structure of every bank to handle Sharia matters. This is we endorse it. Our standard requires that every bank must have a Sharia board. So even the conventional banks who have started converting process and everything, they must appoint the Sharia boards immediately. Thank you very much again, Brother Najibullah Omari, for being with us, and you are most welcome. We have comment from Sister Salima Salam. Assalamu alaikum, jazakallah khair for your time and effort in educating the market. I work as an MD for a fully licensed microfinance institution attempting to provide Sharia compliant services. Any decision made is weighed from best values of money perspective. Often we face the dilemma of how to strike balance between keeping the running costs low while not sacrificing the quality. Any additional board or departments incurs increasing the running cost and ultimately the price for the client. In this context, would it be helpful to define the minimum standard as that is must have in the best scenario as understandably, not all the service providers can afford the exhaustive Sharia compliance structures. Thank you. Sister Salima Salam, first thing, walaikum assalam. Thank you very much for being with us. And you didn't mention your country, but you are most welcome here. You have raised an excellent concern. I believe we addressed this concern by the proportionality clause that I mentioned and the principle number 12 or 13 that addresses about applicability to specific sectors and the proportionality other considerations. These are the things that are already addressed. I would suggest if you can just read the standard, and while your comment is highly endorsed and agreed, but if you can just make it more specific after reading particularly the principle number 12 and 13 and with the proportionality consideration that we have already included in the standard and the initial section of the standard about the objective and the scope, even we considered these things. So if you can make your comment more specific, we will be highly obliged that if we can find something that need to be improved in the body text of the standard. In principle, what you are saying, we believe that we have already covered and we have allowed this sort of flexibility, a reasonable level of flexibility. But that flexibility does not mean flexibility can be there in the governance structure. Flexibility cannot be there in the Sharia compliance. This, I believe you understand. And we appreciate your concern, your approach that you are already working on Sharia compliant thing. Personally, Islamic microfinance is very close to my heart. So I will be like, you can always consider AAOIFI as your partner. We will always be willing to provide you support wherever needed. With regard to this comment specifically, if you can make it more specific after reading, number one, the scope of the standard, I'm talking about the framework standard, the scope of the framework standard, and what is contained in principle 12 and 13. After that, maybe the quick answer to your question is already there. But with regard to further details, obviously, we'll welcome further specific comments. Thank you again for being with us. Okay, I think there's comment from Brother Sayyid Nurul Qadir. Sayyid Nurul Qadir, advantage of Sharia compliance in financial institutions, please clarify. Brother Sayyid Nurul Qadir, in a nutshell, I would say in English there is a saying that we always quote that the taste of the pudding is in its eating. So the point is that you can have the best Sharia principles available, but till the time you don't have a proper compliance mechanism for getting them implemented, you cannot have Sharia compliance in its essence. And that is the crux of whatever Sharia compliance and Sharia Sharia governance requirements that we put. I'm sure that my answer is very short, may not be good enough for you, but whatever we are discussing in all of this standard is actually an answer towards your question. If you want any more specific comment from me, please let us know through the comments. We haven't moved to the first standard, and we have already got 11:23 Bahrain time. So, but the purpose of the meeting is for sure. We want to address all the standards, but the purpose of the public hearing is actually to get maximum comments. So we would, I would prefer to take all comments which are open for now, and then we can move to the next standard. I know that I'm just now getting afraid that seeing people interest and active interaction, I'm just getting afraid we might not be able to complete even today in this public hearing, but we'll give it a try anyway. So again, there is an anonymous attendee. sorry, this was the question that I parked earlier. May I inquire about the responsible party or department overseeing the promotion and remuneration increases? Sorry, I'm sorry. This one was answered already. My apologies. There were a couple of questions that I did not close. I answered them, but did not close. So just let me clear them in my screen. Sorry, this question I kept open about the Islamic system. So Brother Muhammad Tahir has to just clarify it further. Now we have next comment from Brother Ammar Sasa. Assalamu alaikum. I can understand the need for boards, but I can see the most important Islamic rules application and reference. In like with 5% of interest income, non-halal income is okay for investing in this share. What is the Sharia reference for that? I think people should know the reference, not the decision only. Same like why 30% of interest get allowed, not less or more. What is the reference? Brother Ammar, I'm really sorry that I don't want to address this question in detail because it's not related to today's subject, but I'll very quickly answer to it. First thing, we don't say 5% of interest income is halal. We simply say that if interest income is not, if haram income is less than 5%, which means it is negligible, in that case, you can invest in that entity, but the income coming out of that entity needs to be still purified, means that 5% of the income need to be paid into charity. One view is that that income comprises only the dividend part, and another view is that even the capital gains need to be purified. But the purification of income is still there. So it is not that 5% becomes halal, but rather it is that purification is still needed. So that is part one. Very quick, and I don't want to go in detail about the Sharia reference. The Sharia reference is simple as that, and it is negligible. So the Sharia board defined what is considered negligible, but even that negligible part is not considered to be halal. It is still to be purified. That is part one. Part two, with regard to the debt ratio, the view of the Sharia board is based on the Sharia maxim of Athulus Kathir, that is from a hadith. With the subject matter of that one is different, but the concept is that 1/3 becomes material. If I try to translate in the financial language, so 1/3 becomes material, and that's why 30% threshold is put in, which is less than material. But still, in these situations, if haram income comes, that still needs to be purified. And again, this is just one part of the screening criteria. There are other elements as well, so I don't want to go in detail for this one. Brother Ammar Sasa has another question. I see the difference is huge between new institute and schools regardless for old schools. It is possibility to make close agreed regulations. If you can, again, AAOIFI's effort is all about making a standardized practice. So I think we are trying to do what you are suggesting, unless you have very specific comments about these points. Otherwise, the whole effort of AAOIFI, particularly the AAOIFI Sharia board, is regarding this. Brothers, Ammar has said that it's great that you said we are defining Sharia, but as users can't follow it close eyes. So please refer to Dalil and reference for each rule you put or how you can extract this rule. Brother Ammar, we don't need to put answer in this public hearing today. Our Sharia standards already include the basis of conclusion. And AAOIFI has also published a 4-volume book in form of the Rasat Sharia, which are related to the researches that were originally done for the Sharia standards of AAOIFI. So you can have access to the basis of conclusion, which are already contained there. You can access to the Rasat book that is already published. And thirdly, we are already working on update of the basis of conclusion project for our Sharia standards. This has already gone a long way. We are 70%, 60-70% completed the process of updating that. Obviously, that needs a review of the Sharia board, which will take some time. Thank you very much, Brother Ammar. Brother Ammar has another view. Comment. I believe that other that rules and regulation, I think he's talking about, you should create usul that will be followed for each new coming case. Thank you very much, Brother Ammar. I think this is a good comment. We are trying to do that and we'll try to continue doing that. Thank you very much. Brother Abdullah Al-Marzuki has a comment. The Sharia committee must be independent and not subject to any authority, and it must send its report to the board of directors of the financial institution. Brother Abdullah, I think we are not asking to board of directors. We are asking their report, annual report, first thing, we don't call them committee. We call them board. First thing, committee is something which is considered to be reporting to somebody. Board is considered to be something that is independent by default. So for us, Sharia, so it is not a committee, it's a board. And the board is independent, we fully agree with you. Second part, you are saying that it should send its report to the board of directors. We believe that its annual report should not only go to board of directors, it should go even beyond that. It should go to the stakeholders, the shareholders. Our review and report standard that we are supposed to discuss today covers this thing that the report should be addressed to the shareholders and other stakeholders, not to the board. So they are not even reporting to the board of directors, they are reporting to the shareholders only. Their appointment authority is also the shareholders. So while we agree with first part of your comment, actually we go beyond board of directors in the second part of your comment, and we take it to the main stakeholders. Thank you very much, Brother Abdullah, for being with us. Brother Asfand Malik, most welcome, my dear brother. Salam, Brother Umar. Is there any development or discussion going on with the CB UAE regarding the adoption of AAOIFI accounting standards in UAE? Brother Asfand, we have talked several times to the Central Bank of UAE. Our coordination with Central Bank of UAE in recent past has significantly increased. Additionally, we have talked to some individual members of the Sharia authority of the Central Bank of UAE who are also our members. So we try to convince them, obviously, that they need to take this matter forward. But again, as of now, and not only this, with the Secretariat, we have talked on this matter as well. But I think it will take time. We haven't learned anything very clear from them that they are seriously considering it. So while they agree that there is a need, but they might not have anything in a very urgent agenda as of now. But surely we need to enhance our working relationship with them and to convince them on this part. Thank you very much, Brother Asfan, for being with us. And thanks for whatever you are doing for the cause of AAOIFI. Brother Ziakhtar, Assalamu alaikum. Brother Ziakhtar, welcome. It's good to see you here. Assalamu alaikum. As you just mentioned, sir, just wanted to update that the link of AAOIFI website for the footprint report does not have 2022 report. Both link give same report, that is 2020 report. Kindly ask your IT team to correct it. Sister Zahra, Sister Alia, thanks to Brother Ziakhtar for raising this issue. Can you kindly check it with Brother Sayyed as well as with the IT team? That link should be updated to the 2022 report. Thank you very much, Brother Zia, for identifying this issue. Inshallah, we'll try to resolve it as soon as possible. Sister Zahra, please request the IT team to resolve this issue today, please.
Inshallah.
Just one thing, Brother Zia, I was told that it is already on the website. I recall it, that I was told that it is already on the website. So maybe the link is an issue. Standard report might already be there, so there might be more than one ways of accessing it, but I'll just make sure that this is today. It needs to be made sure, Sister Zahra, that the updated report is there on board. There is another comment by anonymous attendee. In the earlier draft of the governance standard, which was issued in partnership with IFSB, clauses relating to cool off of SB members and maximum tenures, etc. were mentioned. They have been removed in this finalized draft. What is the rationale for and against the cool off clause? It is good that you are anonymous. You know, this is a very sensitive political issue, so it is good that you are anonymous. Okay. The exposure draft that was issued by AAOIFI and IFSB combined on RSGF included certain clauses related to independence of Sharia board. Now, we had two different issues. The first issue was that some of the stakeholders, including IFSB itself, including some of the central banks, including some of the Islamic financial institutions, and including some of the scholars, raised concerns that some of the clauses related to rotation, number of seats, cooling off, etc., are may create problems in some jurisdictions. This is what we heard. And while on the other hand, we have seen that a lot of regulators have already brought in these requirements, like Saudi Arabia, like Pakistan, like UAE, number of seats limitation, Malaysia, number of seat limitation, rotation, all these requirements are there. Actually, the rotation requirement is already there in AOIFI standard number 5 for many years, but the rotation requirement in that one is different from the way it is written in the rotation requirement in the exposure draft of RSGF. So now, after considering those comments, we felt that we need to work more on this part. Secondly, the board decided that we are not withdrawing because when earlier we were working with the IFSB, but now as AOIFI we are issuing our standards. So this subject of Sharia, independence of Sharia Supervisory Board is covered in our governance standard number 5, which I discussed earlier. So from that perspective, the board decided that we take out those clauses which are related to the independence of Sharia Supervisory Board for now. We put it in the project to be initiated for revision of governance standard number 5, which will be done in due course, inshallah. And we will re-evaluate these requirements which were contained there based on the market input, based on the input from all the relevant stakeholders. And based on that, we will come on that. So while we fully agree that having independence is a must, but there can be two angles to seeing things. So for example, I'm just mentioning you one example that, for example, some people feel that having too many number of seats by a Sharia scholar might be an independence threat. On the other hand, there is another school of thought who feels that if a Sharia scholar is dependent only on 1 or 2 or 3 institutions, his independence may be more jeopardized because his income is significantly dependent on 1 or more couple of institutions. So there can be so while we all agree that independence of Sharia board is the first and the foremost important for having independence of Sharia boards, for having a Sharia governance mechanism in place. But how do you perceive independence and how do you implement independence of Sharia board might have different views which need further research. So that is the reason that for the time being, these standards that we are discussing for now are not included. Because there were a lot of market comments, stakeholder comments against those provisions as well. So once we initiate the new project of independence of Sharia board in line with that standard number 5, at that time, we will see, we will evaluate each one of these comments and we will involve bigger, stakeholder, a number of stakeholders to address this issue, inshallah. Thank you very much. I think I should appreciate your close eye that you have been able to actually evaluate the differences between the earlier RSGF, the exposure draft that was issued, and these exposure drafts which are issued. Thank you very much. And on a lighter note, I can understand why you have kept yourself as anonymous. Next comment is from Brother Muhammad Yemer. I am from the Shan Bank of Ethiopia. But thank you very much and welcome, brother. My question, kindly brief the structure of Sharia Compliance Department. I'm very sorry that Sharia Compliance Department structure might not be defined by me, in this short public hearing, because it's a full public standard and actually it's a long standard. So my suggestion would be that you need to read our governance standard number 9. In a nutshell, what I would say, number 1, there should be a Sharia compliance function which includes a department, but function of the Sharia compliance cannot be done by a department alone. So you need to integrate the processes and different HR and different resources in a way that Sharia compliance is ensured. That is the crux of the Sharia compliance function. Then you need to have a Sharia compliance department. The Sharia compliance department shall be reporting to the management with a dotted line reporting to the Sharia Supervisory Board. And the Sharia compliance department must have a very competent Sharia compliance department head who must be meeting the fit and proper criteria. They should follow the scope and approach that is provided by the standard. There can be a separate secretariat of the Sharia board as well, that is the Sharia board secretariat. If there is no separate Sharia board secretariat, which is recommended, in that situation, Sharia compliance department need to function as a Sharia board secretariat as well. This is a very short crux of the standard. I'm just addressing this crux only because this principle is part of today's discussion. But further details about this one, I would suggest you to read the governance standard number 9, which is available on AAOIFI website. Thank you very much, Brother Mohammed Yamir, for being with us. One thing, just my apologies, you can see that people are joining us from across the globe. If I misspell anybody's name or do not pronounce it properly, please, my apologies for that. You can see it's like a real, truly sort of global event. So many people joining from different places. So it is possible that I may not pronounce your name clearly. For that, my apologies. Sister Salima Salam has identified that her microfinance institution that he was talking about is based on Chechen Republic in Russia. Sister Salima, we are so thankful to you for joining us today. And it's so much encouraging to know that in Chechnya you have started the microfinance based on Islamic principles. So happy to hear that. We are working with the Central Bank of Russia as well. We are trying to work closely with them as well. We are working with different bodies in Russia. You might be already aware that our standards are already available in the Russian language, and the SIPA program is now being launched in the Russian language. We just recently launched, I think first exams are to be conducted shortly. So a lot of activity we are trying to do with our Muslim brothers and sisters in Russia, as well as in the Central Asian states. Russian language is one of the primary translation languages for us. So happy to have you here and looking forward towards further growth of Islamic finance in Russia, particularly in Chechnya. It is the first time we have a contact with somebody from Chechen Republic, because we have connection with Tataristan and we have a connection with some Islamic finance players in Moscow and other parts of Russia, but it is the first connection with somebody in Chechnya. So we are so happy to have you on board. Thank you very much. Brother Muhammad Munir is the next comment is from Brother Muhammad Munir from Bangladesh. I'm Muhammad Munir from Bangladesh. I'm working in Bangladesh Commerce Bank Limited. We had just 2 Islamic banking branches. We don't have separate board for both of Islamic and traditional banking. We just running our institution with just one board. Is it all right, or we need to have separate board for both sectors? Brother Muhammad Munir, the board of directors, obviously we do not require to be separate. Only thing is that we require the Islamic finance window to be properly functioning under Sharia principles and rules and under a proper Sharia governance framework. So from our perspective, one single board is enough. But having a Sharia supervisory board for the bank's Islamic finance window is something which is mandatory by AAOIFI. So we'll come to this when we discuss the Islamic finance window related issues. Brother Muhammad Munir, thank you very much for joining us from Bangladesh. There is comment from brother from Ashari Ali. Assalamu alaikum. Is there any Islamic Sharia framework for green financing? I do not want to go in detail for this one. AAOIFI, as of now, on the governance standard side, has our governance standard number 7 on corporate social responsibility. Our corporate social responsibility includes lots of elements which are there in what we call generally in ESG, sustainability, and sustainable development goals. But what we are doing right now is that we are in an advanced stage of revising that standard, and probably that standard will come up as a responsible finance standard. With that responsible finance standard, we expect that some of the aspects of green financing will be included. Maybe it will include some of the aspects of green sukuk as well, and maybe going forward, we can have a separate standard on green sukuk, etc. as well. In a nutshell, the aspects of ESG and the Sustainable Development Goals we believe, are generally and significantly aligned with Maqasid al-Sharia. So when we work on our governance standards, we consider Maqasid al-Sharia as first and paramount, rather than considering the SDGs and ESGs as primarily. But we try to comply with, keep an alignment between the same. So from that perspective, our responsible finance governance standard that will be coming as a revision of our governance standard number 7 will be covering significant aspects of these points. Other aspects of green financing, which are coming from the conventional side and which do not have a Sharia consideration, will still remain valid. Thank you very much, Brother Ashari Ali, for joining us. Thank you. Brother Ammar Sassa has another comment. I see different application of AAOIFI, Mustafa and Muslim Exchange Zoya, but for the same share in each application, I can see same share here is halal and share is haram. I think you should audit all of them. AAOIFI is a standard setting body, not an audit body. We are not a regulator. We are not an audit body. So for sure, we can't do it. Different platform providers claim that they follow our standard, but they should be subject to a proper mechanism of Sharia governance by themselves, and they should be subject to Sharia audit. But AAOIFI cannot provide a Sharia audit. And some of them, I can tell you, they don't follow. I can tell you majority of them, they not follow the AAOIFI screening criteria, which is contained in AAOIFI Sharia standard number 21. So again, for this, I would not like to discuss this issue further, because it's not that much related to our today's discussion. Again, anonymous attendee, Assalamu alaikum. Sorry if my question is repetitive. My question is that if the conventional offshore bank in Bahrain has less than 5% of their portfolio in Islamic assets and also has Islamic deposits, then is it okay to outsource Sharia and also ensure AAOIFI guidelines implemented? The answer is that partially some functions can be outsourced, some functions cannot be outsourced. The exposure draft on this point covers it. So that is the answer in the nutshell. So when we go in further detail by discussing that standard, obviously we'll find some more comments. Brother Osama Ehsan is a comment. Assalamu alaikum. I would suggest that the meeting of SSB with TCWG, that is those charged with governance, and especially the BOD, should be at least minimum 2 times a year, as this creates a due pressure on the management to comply with SSB directives. Brother Osama, I think our standards suggest it 1 time. We will take your comment to the working group and to the board and see if they feel that if you ask me, I would love to have it 2 times. But when we develop our governance standards, we have to keep a balance between the cost and benefit. So the burden on the management at times pushes management and regulators for not adopting our standards. So our standards should be reasonable enough. So I think what we can put is that it should be minimum 1 time and preferably 2 times in a year. I think this is what we should put in the standard. That's my personal view, but your view, we will take it to working group and we'll see how the working group sees it. Thank you very much. I personally believe it's an excellent comment. Only issue is that we at times have to consider cost versus benefit, because then another brother can come and say that there should be 4 meetings. And again, I can justify that 4 meetings would be even better than 2. So from that perspective, I think that keeping 1 and having preferably more would be a good idea. We have comment from Brother Hakim Khalid. Assalamu alaikum. Please, what is the fate of 2022 exposure draft of IFSB AAOIFI revised Sharia governance framework for institution not published on either IFSB or AAOIFI websites? The quick answer is that like 3 months back, roughly 4 months back, I think 3 months back, we published a joint statement. It was a press release by AOIFI and IFSB separately, that since AOIFI and IFSB's standard setting style and mandate is slightly different, hence it was decided that it is better that both of us finalize our respective governance standard in our approach. So that is the reason that we took out the requirements of the RSGF, which were not already part of our other governance standards, and we decided to put these 6 standards in place of that one exposure draft. Normally at AOIFI, you might have seen that we don't put everything in one single standard, rather we have smaller standards because addressing each of the issues separately. So from that perspective, AOIFI decided to work very fast on the track. So if you see, I would say 95% of the requirements of the RSGF, which were not already contained in our other standards, which we have referred to in this standard, are already are already included in these exposure drafts. But the decision is clear that AOIFI will continue to develop our own standards and IFSB will be doing their own standards. We would have loved to complete it together, but since both the bodies had their standard setting style and mandate to be slightly different from others, they are a regulatory body, we are an industry body, their standards are principle-based, our standards are principle-based, but we put the principles in more details. So from that perspective, we actually believe that providing principles in a reasonable detail is very important, which probably is slightly different from their style. And there were certain other factors coming from the stakeholder interaction. It has gone through a long way. In a nutshell, nothing out of that exercise is being wasted. As AOIFI, we are developing all of these standards, and probably they will be coming up with something themselves as well. It has been a great working experience with them. The work by the joint working group, by the joint Shari'ah committee had been great, and we have benefited from every single work that was done by that joint committee and joint working group. Thank you very much for raising this question, and we are still working with the IFSB, collaborating with them in different areas. Here, the issue was the standard setting style and mandate. Thank you very much again. Brother Muhammad Munir has raised a question which is not related to this standard, but it has its own significance. That's why I'm addressing this comment. Some Islamic banks in my country, Bangladesh, are giving fixed interest in fixed deposits, saying it's tentative rate. But ultimately, they are giving that fixed amount fixed at beginning. How is it correct? I have, this is a huge issue. I'm not saying that they are doing wrong. They might be having a good mechanism. In a nutshell, AOIFI has recently developed an exposure draft of governance standard on investment accounts. This is, I would say, this is one of the best documents that AOIFI has ever produced. I would suggest all of you to have a reading of that exposure draft, and shortly we will be holding public hearings on that. So we would like to invite all of you to attend the public hearings on that exposure draft as well. From that perspective, I would like to submit that while there are similarities, but it depends actually on whether you follow the Sharia principles and rules and other controls with regard to investment accounts. In that situation, it might still be Sharia compliant, even if it has similarity with conventional interest. That is my quick answer. And how you make sure that you have proper compliance with Sharia principles and rules and proper controls, you need to follow the Sharia standard on investment accounts, and you need to follow the upcoming governance standard on investment accounts. And additionally, there are a lot of requirements which are contained in our financial accounting standard, which we finalized in December last year, on the investment accounts and quasi-equity. Those are the standards that as a compendium, the Sharia standard, the accounting standard, and the governance standard, they together cover all the requirements. So from that perspective, we believe that as AOIFI, we are doing our part. Now it is the part of the industry and the regulators to get it implemented. Brother Abdullah Marzuki has said, Jazakallah khair. Brother Abdullah, you are always welcome. You know, it's a infinity list for me, because by the time I answer some of the questions, I think I want to move to the next standard. And what happens in between is that new questions come up. So while I'm enjoying this session like you guys as well, to be honest. But my worry is that we have just discussed the 14 principles and have not yet moved to the first standard out of the 5 standards, and we are reaching the break time. And it is 11:54 in Bahrain. Let me answer a couple of questions and take comments, and then we need to take a break for prayers and maybe a little bit break for myself as well. Okay. So next comment is from Hayatu Meniji, where we get the Sharia reference in case like 5% is okay for investing. I think I answered this one. I do not want to answer it again. If the percentage is not the issue, again, that percentage is also not considered halal. It needs to be purified. So I already answered this one. Please, my apologies. I won't be answering it again. The next comment is from anonymous attendee. Assalamu alaikum, Brother Umar. Sister Zahra, kindly share the website where we can get all the courses. Actually, a whole year calendar is being developed right now. Shortly, it will be available on the AAOIFI website. If you can just send an email to mshaukat, mshaukat at AAOIFI.com. Sister Zahra, if you can put that Brother Mughis Shaukat's email address in the chat window as well. So anybody who want to know about upcoming workshops, they can kindly drop an email to Brother Mughis Shaukat to get an update as soon as the calendar is finalized. Thank you very much. Brother Hamzi Fazali has a question. Assalamu alaikum, Brother Umar. I would like to seek your view if the CEO for bank and financial institution to sit in Sharia board. In my point of view, the CEO should actually impair independence of the SSB. Absolutely agreed with you. We do not allow CEO should be sitting with the SSB. SSB may invite the CEO on invitation, but it should not be always mandatory that CEO sits there. I can recall some discussion while developing this thing, but I think Sister Zahra and Sister Alia just make a note of it. If this thing is not very well clarified, I can recall it a part of discussion, but I cannot recall it whether it was written finally in the standard or not. If this thing is not clarified, we need to clarify this part in line with the discussion that was held earlier. Thank you, Brother Hamzi Fazali, for very important comment. Thank you. And thank you again for being with us. Brother Muhammad Mukhtarul Islam, Assalamu alaikum warahmatullahi wabarakatuh. Dear brother, instead of independent SSB, is it better to be that SSB being under the regulatory body? Their appointment, dismissal, and modus operandi is controlled by the regulatory body. Brother Muhammad Mukhtarul Islam, this is one of the discussion points that we had, but our conclusion is that Sharia Supervisory Board should be appointed by the respective institution, not by the regulator. This is our view. Regulator should preferably, it is strongly recommended that they should have their own central Sharia board. Their own central Sharia board ruling shall be superseding any rulings of the Sharia Supervisory Board. So rather than putting all this burden on the regulator, our view is that in order to have harmonized practices within the country, central Sharia board is the solution. And that is highly recommended, not mandatory. But we believe that Sharia board should be there. We will take your comment. Again, if I answer something based on the discussion in the working group and the board, it does not mean that we are ignoring your comment. Your comment will still be taken to the working group. But I believe that this issue was already discussed at working group and board level. And the decision is that this is not a practical solution. Brother Ahmed Al-Sheikh, dear Mr. Ansari, thank you for your efforts. May I ask when we will start discussing 5 exposure draft? It is purpose of the meeting. Brother Ahmed, my apologies. I'm really, really sorry. And, to be honest, it's I feel bad about it that some people feel that some of the questions from some of the parchments might not be related and all that. But let me tell you, brother, one thing, Brother Ahmed. The purpose of these public hearings is to get maximum input from the market and to provide maximum, response to their comments. So from that perspective, while I also want to jump to this one, but I'm afraid I can't. So what I suggest, Brother Ahmed, while I apologize for the delay and some of the time wastage for some of the more senior people like you who have first attended the last meeting also, and secondly, might have read all the standards. What I suggest that now I stop here. We take the break for 15 minutes break. Sister Zahra, we need 15 or 20 minutes.
15, brother.
Sorry?
We allocated 15 minutes.
Okay, we try to join back at 12:15 and then I will start from the standards and I'll explain all the standards and we'll take only very relevant comments about the standards. And with regard to the questions that we have received and the comments we have received right now, we will try to address them towards the end if those participants want to continue. But my apologies, and I find I appreciate you drawing our attention to this. As much as you like that we move to the next standards, I also like that. So I would suggest that we move to the next standards after the break. So we take a break now after your comment. We keep some of the comments on hold and then we discuss the standards and then we come back to the comments. Thank you very much again. So with that, we take a break of 15 minutes. It is 11:59 in my computer. So we take a break till 12:15 Bahrain time for the prayers mainly. And we request all of you to keep connected. We are just coming back shortly. Thank you very much. Sister Zahra, Sister Alia, what do you think? Shall we start? I think it's already 12:17. I can see more than 150 people still there.
Yes, brother. I think we should start.
Yeah. I think majority is already there, and some people we
Correct.
hope will join back again, inshallah. So with that, we start again. Auzubillahi minash shaitanir rajim. Bismillahirrahmanirrahim. Welcome everybody again, and let's move to the main agenda, as our brother Ahmed Al Sheikh has reminded us. So thanks for his kind reminder. Now I will start from the smaller ones. So I'll first go to the Windows standard and then to the subsidies standard. Then we'll come to the 3 standards related to Sharia Supervisory Board. The reason is that understanding that Sharia Supervisory Board has 3 standards together are quite long. And additionally, there are more points of discussion. It will be good if we can complete at least the Windows standard. And I can see a lot of people have raised questions about the Windows standards already. So I'll be sharing my presentation, and a lot of people ask that presentation. They want us to share the presentations with them. Normally, presentation is actually the PDF version of the document, is the PowerPoint version of the same PDF document which is there. So normally, as a matter of policy, we don't share it. We share mainly normally we share only the PDF versions, which are already shared with you guys. The link has already been provided in the chat window. Okay, so we move to the Windows standard, which although in the sequence is a bit late, but since it is important and comparatively shorter, we can have it quick. In the Windows standard, the crux is 2 points. One is that Windows, as per AAOIFI framework, are considered to part of the Islamic financial institutions, and hence most of the AAOIFI governance standard requirements apply to them. Number 2 is there are some specific requirements related to Windows, which actually are because of the additional relationship between their conventional parent and the window, and which requires some of the things like segregation of functions, segregation of funds, etc. So that is the second part of it. There would be a third part of it as more about the financial part that is covered in our financial accounting standard number 40 already. But some disclosure requirements, some of transparency requirements might be needed here as well. So I will not be going into detail about the preface and overview. If anybody has points about preface and overview, they can just give the points. But I think I would mention about the rationale only. The rationale includes to define the approach towards the application of various requirements of AAOIFI governance framework as contained in relevant AAOIFI governance standards to Islamic finance windows of commercial institution, prescribe specific governance consideration for Islamic finance windows, and foster transparency, accountability, and confidence in Islamic finance windows, and mitigate any systemic reputational risk. This is something very important. In some of the jurisdictions where Islamic finance is prevalent and there are large Islamic finance windows or a large chunk of the businesses with the windows, there is a general concern with regard to the Sharia compliance of the windows as compared to the full-fledged financial institution. Even countries like Bahrain, we can see, who adopt most of our standards, even Sharia standards are adopted as part of law, but still with regard to windows, there is no clear Sharia governance framework, and most of the standards are not fully adopted. So from that perspective, Sharia governance standards are not adopted. So from that perspective, it is very important for us to address this issue of Islamic finance windows. The objective of this standard is to establish a comprehensive framework for the consistent and effective application of Sharia governance principles to Islamic finance windows while recognizing their distinctive features, needs, and challenges. Just one comment I would like to make, that I will quickly take you through the standard. I'll not take any comments in between. And then I'll go to Q&A tab after this, and we'll see only comments related to Windows that I will be quickly trying to answer before moving to the next standard. This is the approach to save time and to avoid discussion on some unrelated topics for now, because everybody's time is very precious. Very senior people have joined in, so we need to be a bit careful about their time consideration. So from that perspective, this will be like our approach going forward. Let's move to the scope. This standard shall apply to all Islamic finance windows. Paragraph 3C is the definition of Islamic finance window, which is defined by AAOIFI. It was defined by earlier as well in the FAS 40. Now we have clarified it here as well. Some of the important definitions I'll touch upon. External Sharia audit is as per our earlier standard. Islamic financial institutions are financial institutions that operate in line with Sharia principles and rules, performing banking, insurance, takaful, capital market, and similar activities, and include the standalone branches, divisions, and windows of conventional financial institutions that offer products and services in line with Sharia principles and rules. So the windows are part of the institution definition, which means that our generally all our governance standards, accounting standards, they apply on the windows. Third, 3C is Islamic finance window, and it is important to understand for the purpose of scope as well. This definition is coming from FAS 40, is a reporting entity comprising Islamic financial services. So first part is it has to be a reporting entity. You need to keep separate financial accounting records for it. Is a reporting entity comprising Islamic financial services offered by a conventional financial institution through standalone branches and or divisions. Explanation 1. This explanation 1 is also coming from standard number 4. Explanation 2, 40, FAS 40. Explanation 2 is the new definition in this one. Explanation 1, an Islamic finance window may be formed in compliance with Sharia principles and rules with or without any legal or regulatory requirements, and it can take form of either a licensed window or a virtual window. So what we are clarifying is that a virtual window, normally it should be a licensed window, but even if it's not a window, it should be created as a virtual window. This answers some of the questions that we received earlier with regard to, like, this Islamic finance window issue. So I'll address those answers quickly, but I think partially this is already answered, that from AAOIFI perspective, it has to be generally a licensed window, but it can be a virtual window as well. So what we are saying is that we are not allowing any conventional institution to offer Islamic finance products. I will come to this discussion later. In the specific context of this standard, it is clarified for the purpose of the application of AAOIFI standards, and Islamic finance window is considered to be within the definition of AAOIFI, as I explained already. A management definition is coming from earlier standards. Only thing is that we defined that management explanation we provided, that management of the conventional parent, which is related to this one, like CEO, they will be considered management for this purpose. Public interest institution definition we have already discussed, so I don't want to discuss it again. So it means that even a window can become a public interest institution if it has sukuk which are publicly traded. In some situations, we have seen some capital support sukuk coming from there, and additionally, there are my apologies. I'm just mixed up. So if the number of participants or the number of stakeholders is more than 10,000, then it becomes public interest. So Islamic, so it will become technically speaking, a lot of windows that are operating, and some are huge windows, they will be considered as public interest institution for the purpose of AAOIFI standards. Sharia principles and rules is the hierarchy that we have discussed many times. Those charged with governance is of the conventional parent, but obviously we need some the same thing to be applied. This definition is also coming from IASB standard, and this has been IAESB standard, and it has been actually earlier covered in AAOIFI's multiple standards. Now, coming to application of Sharia governance principles to Islamic finance windows. This is one very important section. So the first part is, an Islamic finance window of a conventional financial institution shall have in place a suitable Sharia governance framework to ensure effective Sharia compliance of its operations. Special considerations become necessary for Islamic finance windows as they are not separate legal entities and are housed within a conventional financial institution. So I do not want to repeat every wording here, but the most important part here is that the Islamic finance windows fund should be completely segregated on a day and clearing basis. You need to keep separate accounting record, and you need to keep things completely segregated. That is the most important issue from this standard perspective. Then we have that institution within an institution model requirement. generally, like, some people say bank within a bank model, but it applies to institutions other than banks as well, like the Kaful window of a conventional insurance, etc. So from that perspective, we have used the term institution within an institution model, which means that a maximum level of operational and financial independence shall be there for the window. This is a requirement. Some of the core components of the Shari'ah governance framework will be there, including external Shari'ah audit if it's a public interest entity. Even if it's not a public interest entity, it is still highly recommended that it should be, strongly recommended that it should be subject to Shari'ah audit, external Shari'ah audit. Other functions will remain applicable in any case. Overall requirements of AAOIFI standards. This is a clause which makes necessary that windows should follow AAOIFI standards, including this standard, other governance standards, as well as the requirement of other relevant AAOIFI standards. Means that Sharia standards, accounting standards, ethics standards, whatever AAOIFI standards are issued, they all are to be considered by the windows. As AAOIFI, we provide a complete set of principles contained in 5 different sets of standards, and they each complement each other. So from that perspective, Sharia standards are the centerpiece, but accounting standards ensure that you record and report the transactions properly. Governance standards ensure that there is a proper control and implementation and governance mechanism to get Sharia rules and principles implemented. The ethics standard talk about the substance and the soul of the transactions and soul of the activities and the behavior of the individuals and the institutions. And auditing standards are there to check for whatever has been happening. This should be subject to accountability and audit. So from that perspective, all these standards complement each other. So here we have a requirement that windows have to follow all the requirements. We have said that central Sharia boards, which are there in different countries, should play a role in with regard to Sharia governance framework for the windows. They have to create a mechanism and request the regulator to actually get those things implemented. All other the fit and proper criteria, other aspects, etc., we have put in separately. But head of Islamic finance window is also a requirement. I think it was one of the comments that head of Islamic finance window should also be subject to a fit and proper criteria, and he should be a person competent to handle these matters. And his reporting line should be to the CEO only, not to other people. Organs of Sharia governance like Sharia compliance department, etc., shall be there, and their appointment, everything shall be according to the same criteria. Then we have Sister Zahra. I just noted here, full stop after window before or. You need to check if it is in the body text or it's only in the presentation. Maybe we need to check it and get it corrected, okay?
No problem, inshallah.
Okay. So I'm not going to repeat every aspect here, internal Sharia auditor related functions. One of the specific aspects for internal Sharia audit is that the fund segregation between the conventional parent and the window, he need to keep an eye on that. This is the auditor or the audit function. They have to keep an eye on this thing because this is a very significant Sharia requirement in addition to the normal requirements applicable on Islamic financial institutions. With regard to the RSAs, they may have some flexibility to decide within their jurisdiction about outsourcing of the internal or Sharia audit function. However, the Sharia compliance function and the SSB function cannot be outsourced. Regulatory regime for Islamic finance windows should be more clarified, particularly with regard to the capital allocation and maintenance, governance and operations. There are certain Sharia issues coming up with regard to the Tier 1, Tier 2 sukuk, which are issued by windows. The new sukuk standard of AAOIFI actually it generally does not allow this thing because it will support the capital of the conventional parent. So, but still there are capital maintenance requirements and all these things as per regulatory requirements. They should be part of the licensing regime. Our suggestion is always the capital adequacy of the window and the solvency of the takaful window should be within the window. That is the general suggestion. But more details related to this are not AAOIFI mandate; they are IFSB mandate. So then we have not gone in any further detail beyond this point, which we believe is IFSB's mandate. Another thing that we have highly recommended is that eventually windows should spin off into subsidiaries. This is our recommendation. So we don't think that having Islamic finance windows is a solution till the end of times. We believe that there should be a mechanism in which Islamic finance windows should eventually convert into subsidiaries, particularly when they reach a certain threshold of assets and regulatory capital. So this is actually a requirement, as a highly recommended requirement, that it should happen as a process. If the conventional parents accounting framework is not designed to produce information for Islamic finance window in line with the requirement of this standard, and obviously a requirement, because this standard requires following other AAOIFI standards as well, which include financial accounting standard. So requisite changes shall be made to the accounting framework. So this is something very important that should be done. And that should be part of the regulatory regime. Like regulator should be considering allowing that framework and those flexibilities for Islamic finance window to be answerable to be able to actually apply other AAOIFI standards, including the financial accounting standards. Separate books of account and accounting records should be maintained. Separate financial reporting should be there. Transparency and disclosure should be there. Separate financial accounting standard of AAOIFI standard number 40 should be applied for the financial reporting. What we are requiring in this standard and standard number 40 of FAS 40, we are requiring that windows should be preparing a set of financial statement in line with the AAOIFI standards, and that set of financial statements should be attached with the conventional parent financials, and only the net figures should be taken to the conventional parent. It should not be line-to-line consolidation, rather it should be following the principles. So this is what we have suggested, or not suggested, I would say that we have required in the exposure draft, which should be the normal requirement by the regulators for keeping separate books of account, keeping separate accounting records, keeping separate reporting requirements as well. I can see a lot of questions are coming up, and I hope that the new questions are about the window. So I'll try to very quickly go for the requirements of the standard, then I'll come back to the comments. A window shall be preparing the supplementary statement, as I mentioned, and these are there are some minimum requirements that are there with regard to the disclosure of financial statements, including supplementary statement about fund mobilized and income and expenditure related to this. An Islamic finance window shall disclose in detail whether or not it has commingled funds, etc. So these are some of the requirements about deficit, how it is financed, sources and application of funds are invested, any income received by which is prohibited by Sharia, etc. Reserves related information. So some of the minimum information are contained in this standard. This is because some of the countries do not adopt AAOIFI financial accounting standards, but still have adopted our governance standards either fully or as guidelines. So from that perspective, still it is useful that at least minimum of the accounting and financial reporting requirements are contained in this one. A very important requirement is that there should be a proper IT system. If the conventional IT system does not support proper Islamic finance aggregation, then there must be a completely separate core banking solution and IT system for the Islamic window. And there should be, even for treasury and pool management, that is the investment accounts, pool management and treasury management, there should be proper system for that. Sister Zahra, I think for the pool management, we need to just align the language with the new investment account exposure draft. I think that is using investment pool accounting. So correct. I think not only pool, so just we need to align the wording. It is requirement remains the same, only we need to align the wording. Then we have Sharia board's requirement regarding the segregation of Islamic finance windows. So while Sharia board will be providing their report on general matters in line with the other requirements of the standards that we are going to discuss, but with regard to the segregation of Islamic finance window, they must have a reporting responsibility being separate, which means that they need to clarify in their report also that in their opinion or not, the funds are of the window are segregated from the conventional and not commingled. External auditor shall also also certify we are not requiring it as a part of the audit report. Because our audit report requirement does not apply on the conventional parent auditor. So rather, we have said that external auditor who will be auditing the overall entity as conventional parent and the window on a overall basis, they shall also certify that separate controls and systems have been maintained and there is no commingling of funds. So this shall be a separate certification required. Responsibilities of those charged with governance, we have mentioned that there should be proper requirements they cannot just run away from the requirement by saying that okay, Islamic is very small. If you are doing Islamic, it means you have a responsibility towards your stakeholder, even if the Islamic window is small. So you need to ask those charged with governance and the board committees, they must follow the requirements applicable to those charged with governance. And additionally, they are encouraged to include an independent member or an advisor for experience with Islamic finance. Just to clarify against one of the question and comment that was received, we are not saying that you keep a Sharia scholar on board. It is not the idea to have a Sharia board member or Sharia scholar on board, because we need to have somebody to advise the board about the Islamic finance matters with regard to their matters. That is the risk, that is the strategy, that is the operations, that is the overall supervision and running of the institution, not about the Sharia matters related decision making, because decision making related to Sharia matters will remain with the Sharia board. Appointment of Islamic finance window, there must be a senior and experienced resource. There must be proper it must be proper qualification criteria for him, and he should report to the CEO. In some of the institutions, we have seen that the reporting of head of Sharia or head of Islamic finance window is not directly to CEO. We believe that it must be an institution within the institution model. So for the business and all the functions, he shall be reporting only to the CEO. That's it. Nobody, even if it's a small window, you need to have a head directly reporting to CEO, because CEO himself, as a part of senior management, cannot absolve himself from his responsibilities that are appearing from this standard. And additionally, because this head must not be influenced by other senior people within the senior management by being in reporting line to them or being very junior to them. So this is again one of the very important requirements that we have put in this standard. It must have the appropriate knowledge, qualification, experience, etc., and basic understanding of Sharia principles and rules is a must. Now coming to some very controversial discussion. Controversial means we believe they are very important, but controversial means that some of the market participants had a difference of opinion on that and had long debate on that earlier in our earlier market interactions. So first part is maintaining operational independence of functions and business units. Let me read it out. All business units and functions, including product sales, services, and marketing, shall be directly managed by the Islamic finance window, while the control and support functions may be shared with the conventional parent, provided that there are defined cost allocation and service level agreements. So we do not believe that a head of Islamic retail should be reporting to conventional head of retail. We don't believe that head of Islamic investment banking shall be reporting or as a part of the conventional investment banking. We don't believe that treasury shall be completely just like this. So we believe that it has to be an institution within an institution model, and hence the functions and operations, particularly for the business units, are to be segregated. For control units and the audit, internal audit, control, compliance, some of the functions you can share the resources, because they do not have a conflict of interest with the business operations. So this is again one of the most important recommendations that we have brought in, and why I mentioned it to be controversial is because there were a lot of issues that were raised during the earlier public consultations. Islamic finance window shall operate through dedicated Islamic only branches and dedicated staff serving only Islamic finance window customer. No customer facing staff of any function shall serve both conventional Islamic finance window customer. So just to clarify that Islamic finance desk, or what some people call window within the conventional branches, is not allowed in this standard. This is again one of the things on which we had some hue and cry. But the point is, this was the point actually recommended by the Sharia committee, that we believe that it is very important that even for reputation perspective, even for segregation perspective, even for sharing of resources and combining of the functions perspective, it's very important that this is kept separate. The various functions of Islamic finance window shall be organized in such a manner so as to ensure maximum independence of the window and avoid conflict of interest. This shall be achieved through the following: dedicated staff for business functions such as consumer, corporate, treasury reporting to the head of Islamic finance window, with dotted line reporting to the respective department at the conventional parent, but not the main reporting. Dotted line only for following the organization policies and strategies. Dedicated staff for other business functions such as product, business, intelligence, marketing, customer service, HR, legal, alternative channels, reporting to the head of Islamic banking, with a dotted line reporting to respective department heads at the conventional panel. Dedicated staff of various control functions, including but not limited to internal audit, compliance, creditor administration, financial control, and risk management, reporting to their respective department heads. These functions shall keep the head of Islamic finance window informed in respect of the reports and observations. And shared support functions, for example, central operations and administration with the conventional parent, provided a transparent cost allocation policy is designed and a service level agreement is concluded with proper approvals from TCWG and the SSB. I can see a lot of questions have come up. I think between 12, 13 questions have come up by now, but and I hope all of those are related to Windows. But please allow me to very quickly complete the standard, and then I'll come back to address each one of the comments. Transactions and dealings with the conventional parent. One of the most important prohibitions that we have brought in is that an Islamic finance window can receive funds from the conventional parent under Sharia compliant contract. Sister Zahra, Sharia compliant, there is a space, just need to ensure consistency in the writing style. I think we were writing Sharia compliant without hyphen. Am I right? Just check it, just follow the standardized policy. However, it cannot place funds with its conventional parent or with any other conventional financial institution, either directly or through the third party. This is one of the most important Sharia issues, most significant Sharia issues that has been observed in Islamic finance windows, that at times they are merely a means of attracting money from the public. So I am a conventional institution. I go to the market. I say, oh, I have an Islamic finance window. I open up deposits. Deposits come on the premise that it is Islamic finance window and it is working under the Sharia. And at times we have seen situations where these funds were passed on to the conventional parent under certain controversial modes like Tawarruk or others, Tawarruk, Sukuk repo type transactions. So what happens is that you make a promise to the common man that you come and open an account with us, and we are going to invest your money on a Sharia compliant manner, but we create a Sharia compliant or contract just to create a hila to pass on that money to the conventional parent, which then uses it for for interest bearing and other impermissible modes. This is one of the most significant Sharia compliance challenges that we identified, and after discussing with Sharia committee, it was decided that it should be there. Always it should be a requirement that window just cannot be a means of getting money from common man and passing it on to the conventional. Even for analogy, I would say that even the AAOIFI Sharia standard and Tawarruk says that this money cannot be passed on, you cannot use Tawarruk to finance conventional institution. That is actually a requirement of the AAOIFI Sharia standard and Tawarruk, which nobody cares about, but that is a reality. So the analogy comes from there, that even passing on money to the conventional parent is like a support to the conventional and interest-bearing activities, which should be avoided, and which is, as an analogy, it is already prohibited in our Sharia standard number 30 of Tawarruk. Now, specifics consideration for other than banking. So in Takaful sector, in Takaful subsector, I think Sister Zahra, I think we should say Takaful sector, not subsector. A Takaful window operator, again, we need to check if it is this A is capital even in the text or only in here in the presentation. Just check it. Other, it should be small. A Takaful window operator shall give assurance that the funds of the Takaful participants are properly segregated from the funds of the conventional insurance policy holders and the Takaful window operators shareholders fund. The expression of an opinion to that effect shall be included in the SSB report of the Takaful window operator. Management of Islamic collective investment schemes by conventional investment managers. Conventional investment managers managing Islamic collective schemes shall also segregate Islamic investment management operations, etc. So these are the requirements related to that. And obviously, the minimum requirements related to Sharia compliance have to be in place. All these standards will be, as per our recommendation, will be applicable on or after 1 July 2025, which means that 1 July 2025 onward, this become applicable, and 2028 onwards, the Sharia audit becomes mandatory. So this is the standard. Now I can see so many questions coming up. So let me take the questions one by one. I'll go from the end, assuming that most of the questions are related. Okay, sorry, there was one question about the window in the beginning. Is it suggested that head of Islamic finance window need to be in charge of all commercial, etc.? It was by anonymous attendee. I think now you got the answer to your question, so I close this question. Then I'll just address the window related issues. So I'm just okay. There is one comment, Brother Samir Razak, Assalamu alaikum. How about conducting the Sharia internal audit function by the existing internal audit team department within the conventional bank offering Islamic products and services? If you go to the Sharia or internal Sharia audit standard of AAOIFI, you will find that it is allowed that the internal audit function department can have the internal Sharia audit function if it has the capability in place. The reason of allowing it is to avoid additional burdens and costs. Still, you need to define a head of internal Sharia audit because that is still a requirement of this standard and that standard. So from that perspective, yes, a unit can be there, but still head of internal Sharia audit need to be defined separately. However, the department can be housed within the internal audit department, but the condition is they must have the identified head of internal Sharia audit, and they must have the team with the appropriate capability as required by the respective standard. Thank you very much, Brother Samir Razak. I think it is good enough answer for your question. I'm skipping some questions for now because just I want to address the window related questions. Brother Mufti Khwaja Nurul Hassan has a question. Brother Mufti Khwaja Nurul Hassan, Assalamu alaikum. First thing is, I would like to welcome you. Thank you for being here with us and your valuable inputs. Question on virtual window perspective in Pakistan's environment. Are there some requirements on physical setup and notice board on IBB, IBW, etc.? So issues may be seen on customers' perception. Brother Khwaja, I think you got one answer already. That what you call in Islamic fund banking window, that is a window within a conventional branch, that part is prohibited as per this standard. So this is something that eventually need to go out unless you are converting the branches. So if you are converting the branches, so you need to start and continue the process. So this is something that is like, you know, that is a more clear approach from AAOIFI now, that we don't want too many windows, like, you know, what we are calling window is what you call Islamic banking division as a whole. So the Islamic banking division as a whole that you have, which we call Islamic banking window, is to be having all the segregated functions. But what you are calling Islamic banking window, that is a desk within a conventional branch. The new standard is proposing to prohibit that. I think this is a good enough answer, Brother Khwaja, because we don't believe that you should have one notice board and selling halal and haram same at the same time. And I would like to mention that this was one of the comments on which Sharia committee had a more clear stance, that we don't want this thing to happen on an ongoing basis. Okay. Brother Ahmed Al-Assas has a comment. Complete segregation of Islamic finance windows funds on a day and clearing basis from the commercial parent funds, including keeping separate accounts with the central bank and clearing houses, may not be possible, as we understand the central bank in certain jurisdictions do not allow commercial banks with Islamic windows to open two separate accounts, that is one for commercial funds and other for Islamic funds. Brother Ahmed, very good comment. We personally, I personally agree with you. So this is the requirement, but again, if the regulator adopt our standard, then obviously they have to allow this. If they don't adopt our standard, then again, we know that you will be having a challenge with this part. In that situation, you need to maintain sub-accounts. Means that from the accounting perspective, you need to maintain segregated funds. Even within internal purpose, you need to keep segregated funds. But only thing is that for the purpose in those rare circumstances where the central bank doesn't allow you or the clearinghouse doesn't allow you to have two different separate accounts, in that situation you can have it. These are the situations where we mentioned that it might not be a license window, it might have to be a virtual window, because a license window would generally be allowed a separate account. Brother Ahmed, you have an excellent comment. We will take this comment. Maybe we need to provide some clarification based on the answer that I have provided, but we might need to provide some more guidance on this part. Thank you very much. I believe you raised a very good point and we might need to address it in the final standard. Thank you again. Brother Abdul Hadi Hussain, why do we need Shari'ah board to I think again this question is not related to this one, so I'm not related to Windows, so I'm not answering this one now. My apologies, but I'll just jump to Brother Ahmed Al-Assas is a comment. Let me clarify this one, although it's not related to window, but I need to clarify. The AAOIFI GSs which are related to Shari'ah governance framework should be explicitly stated here to avoid any ambiguity. Brother Ahmed, we clarify Shari'ah governance framework as part of in the standard number is the first standard, the framework standard where we have mentioned. But let me mention one thing. We cannot define it as a conclusive list, and that is why we will not provide a list here. So, for example, after these standards, we issue a governance standard on investment accounts. We cannot say that the investment account governance standard is not part of the Shari'ah governance framework of AAOIFI. Actually, all governance standards that we are issuing in one way or another are part of the Shari'ah governance framework. At least part of it is part of Shari'ah governance framework. So we'll take your comment, but in my humble opinion, will not be doing it, because we already as of now has multiple standards in pipeline who will be part of the Shari'ah governance framework, the comprehensive Shari'ah governance framework. So what have we said in the beginning is that we are covering the core principles through these standards, but there are additional standards coming in, including the investment accounts standard, including the standard on determination of Sharia principles and rules, etc. Even the Sharia decision-making standard, which is just to be just due for finalization, is also part of it. Brother Hamzi Faisali has a very good question. Can Islamic window outsource their control function, and to what level they should consider at this time for Islamic window to have their own control function? I think we answered that compliance function cannot be outsourced. Internal Sharia audit can be outsourced. Compliance function can be work under as a unit with the shared function with the, because control functions we allowed, they can be shared with the conventional parent. So those cannot be outsourced, but the control functions can be worked with, you can work with the combined basis with the conventional parent with the service level agreement and the segregation of cost. However, only internal Sharia audit, as I mentioned, can be outsourced, but the regulator has to allow it. Brother Muhammad Wali, you have an important comment, but I don't want to answer it right now because we have gone too much off track on some discussions. I'll try to address it in the end, but right now let me answer the issues about the windows. When we reach the Sharia the Sharia Supervisory Board related standards, we can try to address that. There are some other comments from Brother Abdullah Ali, etc., which are not related to window. Okay, Brother Hamzi Faisali again has another comment on window. How do we define the threshold of assets and regulatory requirement? Can be analogy of zakat payment RSA set up in Islamic window should be subsidiary full-fledged in the IBAN reach the asset side of certain amount and it's this is where we just can give the principle. The decision with regard to this shall be purely in the hand of the regulator because regulator is better aware of the market practices. We can just give the principle. The principle is eventually windows should convert into subsidiaries. If windows are very small, don't push them. But if the windows reach a specific threshold size of operations, etc., you can put it. But I think that AOIFI should not be putting it. But again, just considering based on what you said, I think we can discuss it with the working group and the board if we put a threshold, something like 33% analogy or 30% analogy for for converting into a subsidiary, etc. I think this is something that that we can say that if the regulator, because even for regulators, they might not need some guidance on that part. So maybe we can consider providing some guidance even for regulators for this, that generally if you reach 33% of the assets, or if you reach the 33% of the deposits, or if you reach maybe 33% of the capital size, in these situations, you should be, or 33% of the profits coming from Islamic. I'm just thinking, I'm not concluding on that part, but maybe we can discuss in the working group and the board that maybe some threshold may be provided. Like for public interest entity, we provided a number of 10,000 because otherwise it would have been very open for any regulator. Some of them may think only 1,000 might be enough. Some may think that even 1 million is not enough, something like this. So it just something like this we can come up with. Maybe we can suggest a threshold like this. So Brother Hamzi, it's an excellent comment. Let's take it to the working group and the board and see how they respond to it. Thank you again. There is a comment by anonymous attendee, and this is I think this is a general comment, but it is related to Windows also, so I am addressing it. Sometimes the IT system is not capable of profit calculation. This is done manually. If the Sharia board is happy with this, this should be fine. Our point is that while manual calculation, particularly for Windows, etc., might be acceptable for some time, but again, why it is so much neglected sector that now everything is being computerized in the banks. Even the account opening is being computerized. Like you are having digital onboarding and all these things. And Islamic banking and particularly the profit computation part is so much neglected. Why? Even I have a question that in most of the institutions, I don't find a proper dedicated team for the profit and loss computation. At times, there is no single person. At times, just one person defined for that. While this is 70% of your balance sheet, and you don't even assign people to it. Why? Because you don't follow controls and practices which should be there. So from that perspective, our new standard on the investment accounts is governance standard on investment accounts is requiring a proper team, proper IT system and everything. So this standard is not that much clear on this part, but the investment account governance standard is very clear on this part that you must have IT solution. For everything now, which is being in the banking sector is being computerized, and only this is the poor area, this is the neglected area. Why? Because at times you want to just play with the numbers. I'm sorry, but this is the problem. And second problem, again, Sharia board cannot be satisfied with it unless they get a Sharia audit of it. How they can be satisfied with it unless they have the proper Sharia audit mechanism in place to get it checked? Even if it is manual, normally our Sharia boards do not include experts. Obviously, having an expert is a discussion point for the next standard. But what we would like to submit is that you must have a proper mechanism and system in place. And even if they rely on the manual system, I think they need to rely on an independent check of it, not only directly on the management. Thank you very much for a very good comment. And I took it because it was related to the Windows in particular, because what is happening that Windows are running the core banking solutions of the conventional parent, which has no flexibility about these things. And I can tell you that some of the requirements cannot happen without IT system. The segregation of pools and the allocation of assets and investment accounts to respective pools and the treasury operations, or all these things, it cannot happen without having a proper IT system. So part of it anyway needs a IT system, even if you do the calculation manually, but information availability cannot be happening unless you have proper IT system. So this applies to the Windows as well. Brother Muhammad Wali has comment, the clause, it will kill the leverage model of many Islamic windows. I don't know which clause you are talking about. I think you are talking about the segregation of funds and the passing on the funds from the Islamic window to the conventional parent. I think you are talking about this one. And if it kills the leverage model of conventional parent, which encourages their interest-bearing business, then we would love to kill that. But if it is about killing the legitimate objective of Islamic window, we would request to kindly clarify your comment in more detail, please, Brother Muhammad Wali. Thank you very much for your comment. Brother Khwaja Nurul Hassan has identified a clause which is in the regulatory framework for Pakistan, whereby the Sharia board is required to report whether or not the bank has complied with the central bank instructions on profit and loss distribution and pool management, whether or not the bank has a comprehensive mechanism in place to ensure Sharia compliance in overall operations, etc. I think, Brother Khwaja Nurul Hassan, I fully agree. Our report format, that is again a discussion point for today, and again on which I'm afraid we might not be able to have discussion. This is now, we are reaching 7 hours of discussion, 4 hours in the last session and 3 hours already completed on this session, and still we are nowhere. But the good point is that we have a huge number of market participants coming in, providing their comments. Some of the comments are very, very useful. So thank you, Brother Khwaja Nurul Hassan. I think your comment is very much valid, and this is very important and should be there. But I thought that you are talking about the window part, that segregation of funds related to windows. So I'm not sure whether it is included in your regulatory regime or regulatory requirements or not. If it is not there, then what we are asking in this one is about having the even for the windows, you need to talk about the segregation part. Thank you very much, Brother Mufti Khwaja Nurul Hassan. Anonymous attendee, Salam Walaikum Assalam. For Bahraini conventional banks, what qualifies this conventional bank to be subject to Sharia board and Sharia audit, considering the proportionality consideration that's stated in Sharia governance framework? The point is, if a conventional offshore bank does only Islamic deal every 5 years, then it would make sense for functions such as Sharia documentation to be outsourced. The proportionality consideration need to be more defined in our view. Now, this is an excellent comment, and this comment is close to the comments that we received earlier, at the Secretariat. So now, if you are doing one Islamic finance deal in in 5 years, you are not a window. You don't need all of this governance framework. The question is, are you doing deal with the retail level, with the general public, or you are doing that deal with the Islamic bank? If you are doing that deal with the Islamic bank, actually, it might not be considered as your product, and rather it might be considered as their placement or transaction with you. So in that situation, the counterparty having an Islamic window or having a full-fledged institution, having all the Sharia governance requirements, etc., we can consider that transaction to be part of their transaction, not of your transaction. But if you want to go to public and do public transaction even once in 5 years, the question is, you are creating a window, because we say that conventional institutions should generally not be allowed to do Islamic finance transactions and to claim that they are doing Islamic finance transactions, which means that conventional parent can do Islamic finance transactions with the common man, with the investment account holders, with the counterparties being like, this, they will. So if you just invest in a sukuk, if you are doing a deal in which you become the investment advisor and you do a sukuk, we don't believe it is a Islamic finance window. If you do a transaction with an Islamic bank in which their Sharia board approves the transaction and they have the whole mechanism, we consider it as their transaction, although AAOIFI Sharia standards have limitation of transaction between Islamic and conventional, but still we assume that it's a Sharia compliant transaction. In that situation, this is a Sharia compliant transaction of that bank, not yours. So if you do an investment advisory and just do a sukuk, you don't need a window actually, technically. You can purchase and sell sukuk. There is no need of having an Islamic finance window to just purchase and sell sukuk. You don't have a requirement for doing like having a window to do transactions with Islamic institutions. Now what you need is, if you go to public and offer a product, asset side product or a liability or quasi equity type product, you go and say to the public that please make an investment account with me or a current account with me which is Sharia compliant, or make a investment product which is called like musharka, mudarba, wakala, something like that gives an impression that is an Islamic transaction. Or you do an asset transaction with your customers as murabaha, ijara, etc. This means that going to public and doing transactions with public, you are entering into a domain of Islamic financial institutions. And for that purpose, you must create an Islamic finance window, even if your operations are limited. I think this answer should be good enough for your question. It is more or less similar to some comments that we received earlier. I believe some other people may have questions like this in mind. I think Sister Zahra, Sister Alia, whatever I have explained here and whatever we explained to that market participant earlier, I think we need to write some guidance or basis of conclusion based on that with the standard, because this point needs to be clarified. But from that perspective, I think I have tried to clarify your question. I'm sorry, your name is not there. A lot of people today are appearing as anonymous attendees. I don't know who they're afraid of. But on a lighter note, I'm not sure whether they are afraid of or they just don't know how to change the name. But my suggestion, if you all can put your names, it will be better. So anyway, I hope your question is addressed. It is an excellent comment, very important comment. I believe we need to address it in the standard somehow. Thank you very much for that. There is a comment by Brother Ahmed Al-Assas. Different models and structures are used to run Islamic windows within commercial banks, and there is no one-size-fits-all approach. In certain setups, Islamic windows are more like Sharia-compliant governance and advisory unit and do not necessarily get engaged directly in Islamic business activities, which are separately handled by specialized business units under the guidance of the Sharia board in accordance with the Sharia governance and regulatory requirements. The exposure drop, therefore, should be amended accordingly to take into consideration and allow different models and approaches for the Islamic window are followed to govern and ensure Sharia compliance in their activities. Brother Ahmed, we are here to standardize the practices, and we are here to ensure the practices are there to ensure utmost Sharia compliance. From that perspective, your comment is absolutely valid, very strong comment. But from that perspective, I would like to submit that based on the discussions in the working group, in the board, and in the Sharia committee, I can tell you that the view of AAOIFI is not to allow different models of windows like this. But if somebody is just doing a couple of transactions without actually going to public, in that situation, as I provided comment earlier on the response of the anonymous attendee, as you might have heard already, in that situation, you can say that you don't have a window, you just are doing a counterparty transaction. But if you go to public and say we do Islamic finance transactions, I am afraid AAOIFI's view is clear that from day one, you need to segregate, and we do not want to allow different models. With that, for sure, we allowed some flexibility, a bit of proportionality. All these things are part of the framework, but it does not mean that you can compromise on the governance framework. So, Brother Ahmed, thank you very much for your comment. We will take it to the working group, to the board. We'll see how they see it. But I'm answering you based on the discussions already taken place in the board, in the working group, and in the Sharia committee, that we do not want Windows to allow in multiple models with the very relaxed models, etc. Rather, Windows need to be subject to the same set of Sharia governance principles. Windows should not be just a means for the conventional institution for getting the benefit but not taking the cost. This is the crux. Islamic banking is on a competitive disadvantage because of it. And not only this, we are afraid about bigger issue is that we are afraid that the level of compliance in Windows is not equivalent to what is there on the Islamic full-fledged bank. So from that perspective, we have our concerns on the Windows sector, and we believe that it needs to be governed very well. Thank you very much for your comment. I believe some part of your comment that is addressable, I already addressed in the earlier part, but align two different models or like flexible governance models, I think will not be allowed. Only thing is, yes, a bit of flexibility and proportionality consideration is allowed in the standard already. Now I'm shocked. There are 33 open questions. Some of them I'm not answering. I know that I have put them on hold, but just questions and that are coming in, there is a long list of it. Brother Mufti Khwaja Nurul Hassan has a comment, section 30, cost may be taken by conventional as per their decision or some limited amount and completely sharing as per expense of conventional Islamic. Brother, we have required service level agreements and cost sharing agreements. This is what we have required, Brother Mufti Khwaja. So I think it is an answer to, like, you know, maybe what you have in your regulatory framework is good. But probably I would say that what we are bringing now, that there should be proper SLA, service level agreements, and proper cost sharing agreements. That is actually a better idea. Thank you very much, Brother Khwaja. Brother Abdul Hadi Hussain has a comment, if the offering can be segregated by name, system, ledger, why not we allow conventional branches to offer both products instead of not allowing Islamic products? Brother Abdul Hadi Hussain, this is a very good comment. This has been allowed in most of the markets. The Sharia committee particularly took a strong view on this point when we were developing our standard and it was getting reviewed by the Sharia committee. For those who are not aware of the AAOIFI's mechanism, all AAOIFI governance, accounting, auditing, ethics standards are also subject to Sharia clearance. That Sharia clearance is provided by a Sharia committee of the Sharia board, which is authorized to approve these standards based on the Sharia standards of AAOIFI. In case there is an issue that is serious, they refer it back to the Sharia board. So I would always say that all AAOIFI standards are Sharia standards. Our accounting standards, governance, ethics, and auditing, and accounting, governance, auditing, and ethics standards, all these standards are also Sharia standards. And they go through a rigorous mechanism of Sharia board's approval through our Sharia committee. So the Sharia committee took a stronger view on this point. There were multiple issues. One is reputation issue. Second is function sharing issue. Third is cost sharing issue. Fourth is I believe that segregation issue, again, segregation, it can be managed towards the end, but even a day and every branch balance need to be segregated, that becomes an issue. So it's a lot of clearing issues and segregation issues, and as I said, cost sharing and function sharing issues are there, and much bigger than them is the reputation risk. Because, you know, the common man, the biggest allegation against Islamic finance is they are not different. They are the same. They just do make different papers. That's it. This is something that is impacting the real Sharia compliance in Islamic finance. This is impacting the real growth of Islamic finance. It is impacting the reputation of Islamic finance. From that perspective, it was a like, you know, a recommendation, and Sharia committee insisted on that one to be held, that the desk or unit within the same branch should not be allowed, and there should not be a single person working on both functions together, particularly the Islamic finance related, Islamic window related, people can never be allowed on the conventional related function. If the conventional related for people are working, they should be subject to SLA and subject to cost sharing agreement. I can see a good friend here, Brother Muhammad Ghazi Muhammad Dev. To be honest, Brother Muhammad Ghazi Muhammad, it is like, great pleasure to see you here. Item 33, are there any AAOIFI suggested products and instruments to place window funds under conventional? The quick answer is we don't allow it to be placed. So even there can be some Sharia compliant solutions which can be considered Sharia compliant by certain scholars, like tawarruk based transaction or a repo based transaction with the conventional parent. Again, tawarruk with conventional parent, conventional institutions is generally not allowed, but there are some relaxations based on need. So considering these things, there can be some products in which counterparty can be a conventional institution or even a conventional parent. Some scholars have given a fatwa that Islamic window can do a transaction with the conventional parent because Islamic window transaction is backed by the assets which are owned fully or partially by the investment account holders, while the conventional parent is a different entity because it's representing the shareholders. Even considering these factors, we have prohibited it because it tantamounts to supporting the conventional activity on one hand. And second hand, making fool of public that, okay, we are taking your money for Islamic transactions, but actually we pass them on to the conventional to do the conventional transactions. Considering these both factors, the Sharia committee decided that we will not be allowing it. Thank you, Brother Muhammad, to be with us, and it's a great pleasure to have you here. Brother, again, I can feel some of the questions which are not exactly related to the Windows. I'll be coming mainly to the Windows related questions, please. Brother Ahmed Al-Assas is the comment again, making it mandatory that all business functions must be directly managed by Islamic window, and the Islamic window shall operate through dedicated Islamic only branches. Staff may cause disruption in internal Sharia institutional structure of the bank, where Islamic windows are essentially operating as Sharia governance document departments. It will lead to overlapping functions, complexity, and give rise to additional cost, and with no tangible commercial or compliance related benefit. Furthermore, having the middle and back office functions separately dedicated to Islamic banking would also impact the efforts that the bank made in controlling their cost to income ratios. We therefore believe that as long as necessary Sharia checks and controls, including Sharia review, audit, Sharia risk management, Sharia governance framework, Sharia board, etc., are in place, the Islamic and business activities should be allowed to be handled by various specialized departments within the bank. Brother Ahmed, it is your view. We highly respect your view, but we don't agree with your view. Unfortunately, we don't agree with your view. And when I say we, it's not Umar as a person. I'm talking about what has been discussed at length in the joint working group and in the joint Sharia committee and the AAOIFI Governance and Ethics Board, and in the earlier public discussion sessions. At all places, it has been discussed and it has been decided that window, okay, in a nutshell, windows should not be there. That is one view. That is one extreme. The second extreme is your view that conventional can just handle everything and you just have a Sharia governance unit to make sure this is there. Brother, we are trying to find a middle ground. We are not saying that windows should not be there at all. I can tell you that some of the scholars within the Sharia committee and some of the working group members were of the view that windows should not be allowed at all. They are creating more problem than benefit. I can tell you there are countries like Qatar who did not allow who actually used to allow windows and then closed all windows. There are countries like Jordan that don't allow window. There are other countries, even Lebanon and others, who do not allow window, considering so many disadvantages of window and the control and governance related issues with windows. So there is one view on the other end that there should be no windows, only subsidiaries. Now there is the other view that you are having, my dear brother, and your view is keep it relaxed, let the conventional do everything, you just do the transaction. Brother, let me tell you one thing. Interest is something which is considered to be war with Allah Almighty and His Messenger. I do not want to go into debate with regard to the severity of the sin of interest. You know, Islamic banking and conventional banking are not just like, two faces of one coin. No, they are fundamentally different. And we do not want conventional banking to take advantage of lenient governance requirements and putting Islamic banks at a comparative disadvantage. We need to consider so many factors. We are a standard setting body. On one side, our utmost priority is that industry should grow. But our priority is that industry should grow not only quantitatively, but also qualitatively. You cannot say that, oh, we are in infancy stage. Okay, in some markets like Bahrain, you are 40 years old, 40 plus years old in Bahrain, UAE type markets. In other markets, the experience of Islamic banking are 40 to 30 years old. You cannot say we are just infants. Yes, you are less mature as compared to the conventional, but you cannot say that, okay, till the end of time we will remain a niche market and will remain just infant in the infancy stage. I'm sorry, your infancy stage in most of the markets is over. And I can tell you, there are examples of some of the markets where Islamic finance started with better governance practices and it has flourished much better. Oman and to some extent Pakistan are good examples. That from day one, they put a requirement that if you want a window, from day one, whatever we are saying is required. Everything has to be segregated. Yes, now we are putting a bit more requirement that even the desk within the conventional branch should not be there. This is a good practice that we are trying to take it to the next level. But I can tell you that what we are trying to do is a balance between the two extremes. One extreme, there should not be any window because its disadvantages are more than advantages. The second extreme, let windows run on a free basis. Only just put a governance and control unit. No, we don't want both of it. Yes, we are willing that any conventional institution that want to come into Islamic finance, they should come seriously. They should consider it a proper institution within an institution, and they should follow every requirement. And if you don't do it, then what is the advantage in coming into it? Why you want to come into it? Do you believe it's halal and what we are doing is haram? No, you are coming into it because you just feel it as a business venture. And you feel that my customer was running away. I don't want that customer to run away from me. From that perspective, it is very important that if you want to come into it, you come seriously. And you need to believe in it. And for that, you need to create a proper separate banking unit or institution within an institution model. We have seen similar issues in Takaful also. So that is, I think, that is the view of the AAOIFI Governance and Ethics Board that I'm presenting in front of you. This is the view of the Shari'ah Committee that I'm presenting in front of you. I can tell you that yes, argument that you are putting is very strong, particularly from commercial perspective. But we want to keep a balance between the commercial and the qualitative aspects. So thank you very much, Brother Ahmed. Every comment that you made is very strong comment, very valid comment. But at times we might need to have differences of opinion. And I am just submitting that AAOIFI is not taking the harsh way. Harsh way would have been taking the other ground, saying that windows should not be allowed at all and there should be windows only, subsidiaries only. We still believe, and we believe that subsidiaries is the better solution. And that is why we said that if windows reach a threshold, they should be converted, highly recommended that they should be converted into subsidiaries. That is what the AAOIFI Governance and Ethics Board and Sharia Committee's original view is. But we want to keep a balance. Yes, we know there will be some problems in the market, but I can tell you that if those institutions, conventional institutions who want to work on Islamic finance on a proper basis, we are all there to support and address their challenges. We'll try to do whatever we can do. But if it is about just the business advantages, then I'm really sorry. I'm afraid we may not be able to support that approach. And it's again, when I say it's not Umar or the Secretariat, it's the Governance and Ethics Board, the Working Group, and the Sharia Committee. More or less on these matters, there is a consensus among them. Thank you very much, Brother Ahmed. Again, very strong comments, very well written, very good comments. And for sure, Brother Ahmed, as I mentioned, every comment from you and everybody who has provided here, every comment will be taken to the respective working group and to the board. Obviously, they will ask them to reconsider their approach, but I am summarizing what their approach is. Thank you very much again. Brother Muhammad Wali has a comment. Clause 3032 will kill the leverage model of many Islamic windows. He's clarifying his earlier comment. This will simply not be viable any longer purely due to economies of scale. With Islamic windows being a significant part of the global Islamic banking industry, it would be far-reaching implications, especially in dual banking environment markets. Brother Muhammad Wali, I think by answering Brother Ahmed, I have answered you as well. And I can tell you, brother, we are sure nothing like this will happen. We understand that yes, it will have a little bit of cost consideration, but in the longer run, it will make sure that the industry is on solid foundations. It is qualitatively also doing well as it is doing on the quantitative side. So from that perspective, we believe this is important. I can tell you, we know that some of the branches in UAE, some of the windows in UAE, some of the windows in Pakistan, some of the actually in Oman, the largest Islamic bank is a window. In Pakistan, it was used to be second largest. I think the third largest bank is a window. And in UAE, I think number 3 would be a window, which would be much bigger than full-fledged Islamic banks. So from all these perspectives, I would like to mention, these are just 2-3 examples. I can tell this is the case. I can mention Jordan. Islamic banking has grown well. Jordan doesn't have branches, doesn't have windows. Qatar used to have windows. They closed down all windows. Qatar has good share of Islamic banking industry. So for us, this is not the argument. For us, yes, we understand that the commercial banks right now, conventional banks are at an advantage, and Islamic banks are at a disadvantage because Islamic banks are subject to additional cost and all these things. And the conventional banks can run freely. From that part, again, we just want to do the right way, which we try to find as a middle ground. Thank you very much, Brother Muhammad Wali. Your comment again is very valid. For sure, we will take these comments to the Sharia Committee. And if I answer these comments in a negative, does not mean that the committee, the board, and the working group will not be having a proper look at it again. This is coming as a significant comment. Different people are talking about it. We'll try to readdress it, define it, and if possible, any flexibility is possible, we'll try to find it out. Brother Sohaib is here. He was here in the beginning. I just want to know if Brother Sohaib is here. He was promoted to panelist earlier, I think. I have spoken a lot on this issue, but if Brother Sohaib Umar is here, I would like to listen to him also on this point. I can't see him. So let's move ahead.
Sorry.
Yeah, Brother Sohaib is here. Please, Brother Sohaib, if you want to add anything on this point, because this has been one of the most discussed points at different levels.
Sorry, I've just been promoted as a panelist. Not much to add, except that these points were considered extensively by the working group and the board, and the position that has been taken after considering these points. So, and based on various markets experiences of Islamic windows. So this is the collective position of the working group at the moment, that the short-term benefits of allowing tactically some conventional banks to offer windows in a very, you can say, not a very elaborate model, those benefits are much less versus the damage that it does to the long-term growth of the industry, because what happens is that sometimes non-serious people come into the industry, and then when you have two market players, one having an elaborate Sharia governance framework, another having a very light framework, and they both are selling the same thing, then that creates confusion in the market, and that is also not fair to all the parties. So having considered all of these things and having looked at successful experiments like Oman, where from the start Islamic Windows had an elaborate model, and contrary to public perception, it actually helped the growth of the industry. It has been one of the fastest growing of all the markets. So given all of that, I think in our opinion, to take the view that it is actually non-beneficial for the industry to allow to have this model is probably not the right approach. However, as Brother Omar said, we can discuss this again when the comments are sent back to the working group and the board.
Thank you very much, Brother Sohaib. Now, let me see if we have other comments on Windows. Okay, Brother Abdul Hadi Hussain has a very good comment, I believe. Standard states that Islamic finance window can receive funds from a conventional parent under a Sharia compliant contract. If there is consolidated financial at the end and the window is not a separate legal entity, where conventional business unit doesn't charge any cost from the Islamic, do we still have to contract, which is no legal basis for this? Okay, I think Brother Abdul Hadi Hussain, very good comment. Now, first thing is, the most easy Sharia compliant contract is qard. Conventional parent can provide a qard, or that is a simple current account, to the Islamic bank, Islamic window. So that is it is Sharia compliant. There is no cost to it, and in consolidation, it is eliminated and all that. That is easiest form. So when we said Sharia compliant form, obviously it doesn't necessarily mean that it needs to have a return. Then there can be situations where there is a Sharia compliant contract which has a return. For example, they can have create a mudarba type structure, or they can have another Sharia compliant transaction structure, any other that is approved by Sharia. Now, one thing I would like to mention, Brother Abdul Hadi Hussain, that I mentioned this thing partially earlier as well in response to one of the comments, that conventional parent is owned by shareholders. So that is one party. But when we talk to Islamic bank, Islamic window, although shareholders own it, but there are underlying assets which are part of the investment pools, and investment pools are owned not only by shareholders, they may have a share in it, but they are owned primarily by investment account holders, which means that these become two different parties. It's not one party. So, for example, if conventional parent do a transaction with the Islamic window, and that Islamic window does that transaction for the assets which are underlying an investment pool, it means that the party is investment account holders against shareholders. So while on one hand, it can be a qard or current account type mechanism, or that even they can provide capital contribution to that. But other than that, still, we know that this is a situation where there can be remunerative contracts as well. And in that situation, again, a conventional parent follows IFRS or other conventional standards. So they will be eliminating in a consolidation as per their style. But from accounting perspective of AAOIFI, we require that this accounting for the window part need to be done properly as per AAOIFI standards and segregate separately for sure. Thank you very much, Brother Abdul Hadi Hussain, for a very good comment. We have Brother Azman Muhammad Noor. From his Asman Muhammad Noor. Can Islamic window staff conduct a task of conventional parent or sister company to day-to-day work beside his full-time job at Islamic window? The answer is no. Standard prohibits that. I have actually mentioned it in the standard that Islamic window staff and dedicated Islamic finance staff cannot do any conventional work. A conventional team member can do work for Islamic under a service level agreement and if necessary on a cost sharing agreement. But he will not be considered an employee of Islamic, rather it will be considered a service provided by the conventional parent staff to Islamic. Islamic window staff if anybody is appointed in Islamic, the standard prohibits that he may not be asked for doing a work of conventional because that is haram. And he has joined an institution or joined a window which is having a halal job. So you cannot ask him to do haram. This is very clear. From this perspective, it is like this. So if a sharing of resources is necessary, our stance is that that person must be appointed in conventional parent and can provide service under a service contract and service level agreement to the Islamic window. Brother Azman, thank you very much for a very important comment. I believe it is addressed in the standard already. So I hope your question is properly addressed. Brother Muhammad Tahir has a comment. Well-informed session. Thank you, Brother Tahir, for your comment. The segregation has to include the core banking system, one for Islamic window based on riba and the other on Islamic principles profit. Brother, I'm not very clear about your comment. Let me put what is the requirement. Let me explain the requirement. The requirement is that the first thing is accounting records are to be segregated. So even if you have one core banking solution, that solution should be good enough to segregate all records. That is part one. Part two, that system should be able to address the Islamic finance transaction related process flows and everything, including the profit calculation, etc. If it is not capable of doing it, obviously you need to find a solution. That can be either through adding additional modules to that or customizing that, or you need to have a completely different core banking solution for Islamic window, which is able to address the requirements of AAOIFI governance standards, Shari'ah standards, and financial accounting standards. So I just tried to summarize because your question was unfortunately not very clear for me. I hope this answers your question. There is a comment from anonymous attendee. How many members of the working group of this standard are qualified Sharia scholars who serve on Sharia boards of Islamic windows? They would have a different understanding to academics and policy standard developers who, with respect, have never run or worked in Islamic banking window. Brother, I don't know, it's a brother or sister. It is a very good comment. But let me tell you one thing. AAOIFI has a very robust standard setting process. So it's not about who is qualified and who is not. Obviously, there were a lot of people who are qualified Sharia scholar members. Our board also include, our governance board also always include 2 to 3 members who are qualified Sharia scholars. Okay. Some of them may be part of Windows as well. At least in the working groups, I can recall some were actually part of working group. Now coming to our mechanism. Our mechanism is that we go through a whole process. There is a working group. We try to put people who are relevant, but this was a huge project. So it was a huge working group, including original working group included around 25, 28 people. Mainly they included regulators and policymakers as well. Number 2, it goes through the board. As I said, board has diversity. It has experts, it has regulators, it has accountants, it has auditors, it has the Sharia scholars. Third, it goes through the Sharia committee of the Sharia board. And for some of the matters, I mentioned that the Sharia committee of the Sharia board is very, very senior. And for this one, there was a joint Sharia committee. So there were additional members who were part of the IFSB Sharia board. So we are talking about some of the most senior scholars from around the globe who are part of the AAOIFI Sharia board, and some of them being part of the IFSB Sharia board, although the final authority is now AAOIFI Sharia committee. But the project team included that as well. We have a public interest monitoring consultative committee mechanism. Every standard goes through them. The RSGF has gone through them actually. I think that the revised version in form of these 6 standards has to go to PIMCC again. But PIMCC also include 2 scholars. At AAOIFI, I can tell you Sharia is paramount for us. Everything is driven by Sharia here. Our accounting standards, governance standards, everything is driven by Sharia. So the issue here is not, okay, now coming to one last point. Sorry to say, but a person, how respectable that scholar may be, if he is sitting on a window, he might be having a conflict of interest. I'm really sorry. We believe that our scholars normally, despite of that conflict of interest situation, we believe that they maintain their objectivity because of the high moral values that they practice. And this should happen. But again, they are humans. So from that perspective, taking their view alone might be considered as a, I would say, as a conflict of interest in some situation. And last but not the least, we have a huge mechanism of holding public hearings and having public comments, including comments from the management of those institutions who are being impacted by this, including comments of the scholars, etc. And if you allow me to say one thing, that some people were angry today that we were not able to complete the public hearing. The first public hearing session in which we wanted to cover all the 6 standards, because they have already gone through the public hearing session in form of a combined RSGF. It was not enough to complete all of it. We were able to complete only 1 standard. Today, again, only discussion on the 14 principles took 2 hours. We are trying to address each and every single comment that is coming. And as I mentioned, each and every single comment will be going to the working group and board for consideration again, as Brother Suhaib also confirmed that they will discuss this point. So it is not that our working group or the board are not aware of what is needed and what is happening. They take into consideration all these points. They represent regulators. We have our own experiences. The secretariat team has their own experiences. The person who has written most part of it has significant experience. And we are talking about not only the one type of markets, we are talking about multiple type of markets. We are talking about different type of views. So anyway, thank you very much. I don't know whether it's a brother or sister. It's a very valid comment, very strong comment. For sure, while your comment has validity on one side, it may take a risk of conflict of interest on the other side. We believe that AAOIFI has a very robust mechanism of standard setting, which we may be biased, but I can assure you we will be biased only in favor of Sharia compliance. If something we cannot decide, we will be biased for prudence. We will be biased for making sure that nothing bad can happen. I can assure you. Other than that, we have no biasness at the working group, secretariat, board, and Sharia committee level. Thank you very much. I think this discussion has taken too much time, and it means that industry, particularly the window part, is feeling, sorry to say how they say it, that is feeling the heat, like, that there is a risk that they may be significantly impacted. Again, we want improvement. We do not want anything to cause any damage to the industry. So maybe we need to find some like, some solutions, brother Suhaib. I think this is something that we need to address again based on the comments received. If possible, some flexibility, some transition, something can be brought in. Let's think of it like, seriously considering the comments. But I can assure everybody that we have a very robust mechanism. And if we are biased only for Sharia compliance. Okay, we have our dear brother Sadaqat Khan. Islamic windows are placing funds with the parent commercial bank based on commodity Muraba contract. However, after receiving the fund, the parent commercial bank may deploy the same funds into interest-based finance. Is that a control on that issue? Brother Sadaqat Khan, that is where we clearly said we prohibited. In this standard, we prohibited it. And I can tell you that putting through commodity Muraba to conventional institution is prohibited in Sharia standard number 30 on Tawarruk also. So for us, it must be prohibited. Sharia standard 30 on Tawarruk prohibits it for Tawarruk and commodity Muraba. But even if another mode is used like Sukuk Repo or something like this, This standard is prohibiting passing on money that you get from the general public on the name of Islam and passing on to the conventional. This is like, not acceptable. This is a breach of public trust. It is a reputation race. This is, to some extent, it's actually a fraud that you do to people, that you give them an impression that, oh, we are doing Islamic, but what you actually do is you just make it a conduit to pass it on money to the conventional. So from that perspective, we are absolutely against this idea. Thank you very much, Brother Sadaqat Khan, for being with us and for raising this very important issue. Sister Zahra, I think we need 4-hour session on each of the standards.
May Allah make it easy, brother.
Because we are reaching at nearly 1:47, which means we have only 13 minutes left for this today's session, and it's already a very long session, and I can see some people leaving, because there were around 210 plus people, now 144. It's a very long marathon session, and I think even we cannot consider subsidies standard today.
Yes,
So anyway, I'll try to answer the questions that we have received right now. And we may not open up another standard for today, and we might need another public hearing session. And if you put it in Ramadan, put it just before Iftar and put it 2 hours only. Otherwise, 4 hours continuous, speaking cannot happen without having tea.
Sure.
To initiate, okay, anonymous attendee again, to initiate a window, it is more healthy, beneficial to have capital adequacy requirement within the parent requirement, because it will give more push for the conversion of conventional bank, the utilization of Sharia compliant deposit in conventional part to offer Islamic product where the income to be booked under Islamic ledger. This eventually helps the conversion. I don't know if it's a brother or sister, but I highly appreciate your point. But can I give you another point also? If you put the requirements segregated for Islamic window, if IFSB standards are also adopted by that country, which is endorsed by AAOIFI for that purpose also for the capital adequacy, there might be an alpha factor advantage. So it is possible that you can work with less capital. I'm just mentioning this thing. When we mentioned about that there should be proper capital maintenance and governance requirements, we did not mean that you must have a full-fledged requirement like conventional. But I can tell you there is another angle to it. In some countries, and inshallah, we hope that more countries will be adopting AAOIFI, IFSB capital adequacy standards, which is close to the essence and nature of the investment accounts. Maybe because of the alpha factor and this, less leverage, you can have more leverage on capital, because investment accounts also absorb a risk of loss. So from that perspective, the capital adequacy requirement of IFSB require less capital as compared to conventional. So maybe it will be an advantage, I can tell you. Don't see one angle only. But yes, again, we have not put any specific requirement on capital. We simply said that regulators should clarify the capital maintenance requirements, and it is our suggestion. For takaful, I can assure you, for takaful, our suggestion is takaful, takaful solvency margin should be maintained within the PTF. Within the PTF, not within the window, within the PTF. This is our recommendation on this side, because you need to keep the fund solvent. This is very important, because fund is the insurer, not the takaful operator is not the insurer as per Sharia. As per Sharia, the takaful participation, takaful fund is insured. So in that situation, our suggestion for takaful window will be always to keep the window solvent. But with regard to the bank, obviously, we are just saying that there should be a clarified regime having appropriate capital in the window as well. That's what we want. Thank you very much for a good comment, and highly appreciate it. Still 31 open comments. Some of them I ignored, but I will try to manage them within next 9 minutes, which are left. Maybe 2 minutes we need to leave for closing. There is a comment from Brother Daudi and Adnan Sasya. Is it acceptable cash from Islamic window to be stored in some strong room with the conventional banking and even using those cash interchangeably? The quick answer. We said that some of the services can be provided by conventional under service level agreement and if necessary cost sharing agreement. So from that perspective, the main point is that the segregation of funds for the accounting purposes need to be done at the day end. It is very, very important. Second part is about interchangeably. The point is that money is fungible, so that doesn't matter. It is my humble view. The scholars will answer this thing better. But from the perspective of our requirement, we have not prohibited conventional banking providing a service. So we are just considering it a service. We are not considering it as a commingling of funds, because we believe that there will be two separate accounting records having a total cash balance, and the total cash balance will be available within the strong room. If you ask me as personally, although this issue is not addressed, but if you ask me personally, I will say that the cash should not be used interchangeably, and rather it should be within the same strong room. It should be kept in different piles. That is my humble view, but the scholars will be providing more clear answer to that one. It will not be my answer. But yes, money is fungible. You can do some interchangeable thing, but you need to keep it separate. Requirement of the standard is that the clearing must be done at day end. So the clearing can be done two ways. It can be even you can pass on the fund to the conventional and you can do the clearing in the accounting, or you can keep both the funds and the total cash balance should match. But it shall be under a service level agreement from the conventional, and conventional should not be placing their money in the Islamic strong room. Islamic can do it under a service level agreement. That is my understanding of what is written in the standard. Your comment is good. We'll consider it if it needs further clarification. Thank you very much. And as I mentioned about interchangeable part, this is a Sharia issue primarily, may not be needed. We might, but still we'll see if the Sharia standard is clear about it, then we can clarify this part as well. Thank you again for very good comment. Okay, we have again some long comments from anonymous attendee. The definition of Islamic finance window as currently drafted and explanation and exposure draft, this is too broad, and as such we believe conventional banks that enter into very limited number of nature of Islamic finance transaction only with IFIs or corporate clients without a standalone branches and should not fall within the definition of IFI. IFW. I answered it already. So if you do transactions with Islamic banks only, it means that Islamic banks are doing a transaction, so you don't need a window. If you are not going to public, you are not a window. If you do sukuk, for us, you are not a window. If you create an Islamic investment fund, which is an investment fund within the definition of Islamic investment fund, the investment fund will be an IFI, but you are not an IFI. Now, last thing, you are talking about corporate clients. This is where I believe that they are public and you need to form window. If you don't do it with corporate clients, again, this is my view based on the understanding of the standard as it is written right now and based on the discussions that we held earlier. As I clarified earlier in earlier comments, Sister Zahra, we need to clarify this thing very clearly. So if you are doing it at a limited scale, but you are doing it with public transactions and you are offering Islamic finance product by yourself, you have to follow window. But if you are just doing transaction for Islamic as a counterpart, they are Islamic, you are just a counterparty, no problem. If you do just a sukuk, you purchase and sell sukuk and you maybe even advise for sukuk, not a problem, you are not a window. Issue comes when you offer a product to your clients. Even corporate clients are for this purpose, like, your customers. For that purpose, you might need to go for window. So this is my answer based on understanding. We might need to clarify it more based on our earlier comments that I provided, and we might need to provide this clarification. Sister Zahra, please make a note of it. I think it is becoming more and more important to answer it more clearly in the standard or in the basis of conclusion. Now, remaining part of it, in order to avoid any ambiguity, we are of the view that scope of application of Shari'ah Governance standard should not apply to conventional bank that only offer this. I think I answered this part already. Your comment is a bit long. but my crux is, I think, the same. Again, there is a comment from an anonymous attendee. I don't know whether from the same person or different. Could we consider applying the principle of proportionality for small Islamic windows, as allocating dedicated front and facing staff may prove to be costly on some organizations? For instance, if the asset liabilities of the Islamic window is less than 10% the total asset liability of the bank, there would be no requirement of dedicated bank facing to sell Islamic finance products. Requirement to have in place a Sharia board, Sharia compliance officer, Sharia audit would remain in place to ensure proper Sharia governance. I think this is a good comment. I won't answer. As of now, we are prohibiting it because it has some disadvantages also. But I think we shall consider this thing very seriously. So I would suggest that we can discuss this thing in the board and the working group and may try to find some flexibility, some solution. That is my view. Again, I will just present it to the working group and board and we'll see how they look at it. Thank you very much for this very important comment. Okay, deals are done with other banks or corporate outside Bahrain, being an offshore bank, not individuals. Thank you. Again, corporate with a customer. We are not talking about individual. When we say public at large, it doesn't mean that it is only individuals. It can include corporates and all that. It can include offshore, onshore. We don't have a problem. Again, the only thing is if you have other bank, then we can say the other bank is the Islamic institution and you are just a counterparty for that one, and we don't want you to be considered as Islamic. But if you do a transaction with your customer, this is where we have not specified any limit on number of transactions or amount. And I think that allowing limited number of transactions on this will create a disadvantage for others. It will not be fair. But again, this is, as I discussed, will be addressed in the working group at length and the board also, I believe. Brother Mufti Khwaja Runurus again, referring the above comment and response for information only, not included by regulator in Pakistan, especially AAOIFI is requiring now, and as we should consider no commingling of conventional Islamic fund. Thank you. I think Brother Khwaja Runurus, you got our point, and I hope that it will be incorporated in Pakistan as well. Thank you very much again. Anonymous attendee again, the SSB members consist of expertise of multiple expertise such as Sharia, accounting, legal, and economics. However, it is fine the executive member is not Sharia. Okay, so again, this is about the Sharia board composition and report. So this question I will not be able to address right now because time is almost over. So I'll address any question related to the windows only right now. Just clarification is required if the bank enters into Islamic wholesale banking activities with other Islamic financial institution only and not the general public itself fall outside of scope of this Shari'ah Governance framework for Islamic windows. Yes, I personally believe, based on the reading of what is written, this does not constitute a window, but for this you will be considered a counterparty. We will not say that you are offering this product, but if you go and say you are offering this product, if you do marketing for it, then you need to become a window. But if you don't do marketing for it, and you just become a common marketing, means public marketing. If you do transaction with your customer only, and those Islamic banks have a Sharia compliance mechanism and everything, and you are a counterparty of the transaction, then we believe it is not subject to Sharia governance framework. Thank you very much again. Brother Ahmed Al Sheikh, again, can we add a clause that if the FI decided to outsource the internal Sharia audit, they cannot outsource it to external Sharia audit firm? I think this is important. I think this is already covered in our standard, either the external Sharia audit or somewhere. So it is an excellent comment, Sister Zahra. Just make a note of it. I believe it is covered in the external audit, in the internal audit standard. I think it is covered. But if it is not covered, we need to clarify. It's an excellent comment. Thank you very much. I believe it is covered. If it is covered, we'll just find a reference and we'll make sure. If it is not covered, for sure we need to include it. Brother Ghazi Muhammad again, okay, my pleasure, brother. And thanks again for being with us. Brother Sheikh Muhammad Isa has issued, has come up with this issue again, that there is an issue of the capital of establishment of an Islamic window because issues of the governance and compliance. I understand that for the conventional entity to have an Islamic window, the capital and all establishment costs must be advanced as Qard Hasana from the conventional entity, but most windows are formed not adhering to Sharia requirement. I believe your comment is correct, but we are not developing a Sharia standard, so we cannot write it here. It will be if at a given point of time, if the AAOIFI Sharia board decides to develop a standard addressing this area and this issue of the initial capital of the conventional entity, we will see that. But as of now, I think that if we write it down, it will be entering into domain of Sharia. In governance, we clarify and put controls of what is already written in Sharia. We do not define what is Sharia requirement. So thank you very much for your comment, but I think it's a domain of Sharia. Again, we will take it to the board and working group and we'll see. Brother Abdul Hamid Al Jarbi has a comment. My pleasure, brother, and thanks for you to being here. Is it extra cost if they try to use a window in a conventional system comparing to Islamic banks, competing to Islamic banks? Actually, right now, a lot of conventional banks are actually having a sort of window. They are doing some operation, but they either do not have a window, or even if they have a window, the window is not subject to all the similar requirements. And that is the issue, that they are at a competitive advantage, number one. Number two, they are not subject to the proper Sharia governance principles, which means that the risk of Sharia non-compliances increases. Number three, there is a reputational risk in these matters. And again, some of the arguments I mentioned already. So from these perspectives, we require this thing to happen this way. Thank you very much for being with us. We have comment from Brother Nasir Al-Masri. The definition of Islamic finance window is currently drafted, and it's this. I think it's the same comment. I think Brother Nasir Al-Masri is the one who was earlier appearing as an anonymous attendee. So Brother Nasir, thank you very much for being with us. I think it's the same comment that you earlier posted as a anonymous attendee. So thank you very much for mentioning your name. And to be honest, your comments have been great. For sure, they are great value addition for today's discussion. And we hope it will happen for we will try to address at least some of them in the final standard, inshallah. Thank you very much, Brother Nasir, again. Brother Sadaqat Khan has mentioned better not to keep hearing session during Ramadan. Brother Sadaqat Khan, you can just sleep in the hearing session. I cannot sleep. So it is bigger risk for me than you. So it is my request to the team also that if we can avoid and if we need, we can keep it very limited. We have comment from Brother Dr. Mukhtar Khan. It is possible to open Islamic banking window in India rather than going for full-fledged Islamic bank. Brother Mukhtar Khan, for new developing markets, we are open for even windows and virtual windows. But right now, I think in India, the regulatory regime doesn't allow it. But it might be a good option to start with. Thank you very much for being with us in multiple public hearings. I believe you attended earlier as well. Thank you very much for being with us. And we look forward towards growth of Islamic finance in India, which is the second or third largest Muslim population in the world. So there is a lot of potential there, inshallah. There is a comment from one of the anonymous attendees, Assalamu alaikum, dear brother. We are committed to staying until the end. Kindly conclude it on time. I'm sorry, we are just 5 minutes over time. I'm just closing it. Thank you very much for being with us. Al-Yushuku Salam. And how can one relate or marry currently released IFRS 17? Okay, this is again a different issue. My apologies, Brother Al-Yushuku. I'm really sorry, but I cannot address this question right now. My apologies. Brother Muhammad Abdul Razak has a good question. Could AAOIFI communicate officially the revisited deadline to share our comments on all those governance standards? I think, Sister Zahra, we should make a communication that at least till end of March we extend the date. So maybe till mid of April. I think we should do it. And Brother Abdul Razak, thank you very much for being with us. It is always good to see senior experts like you to be here and providing your comments. Inshallah, we will be doing it and looking forward to have your comments in writing. With that, I would like to close this session at my end, and we still have 4 more standards to go. And I just hope and pray that we are able to complete them in one session, for which I have doubts now. I think today I have already answered nearly 90 questions. And 19 questions which are a bit unrelated are already open. So to be honest, it has been a great marathon session and highly appreciate your contribution. I would like to thank again the partners for today's session, and look forward towards all of you joining us for the next public hearing session that will be decided shortly, inshallah. Thank you very much. Assalamu alaikum. Sister Zahra, back to you for conclusion.
Thank you, Brother Ammar, for an informative session and interactive, alhamdulillah, session. I would like to thank our partners, KNAKS, ANSF, ISRA, Adil, and Salihan. I would like also to thank all the participants for their time, for their efforts, for their valuable feedback. And please feel free to share your additional comments on governance@iofi.com. We will, inshallah, share the details about the upcoming public hearings on our website and social media platforms. So once again, thank you very much. Jazakumullah khair and fi amanillah.
Assalamu alaikum, everybody. Thank you again. Assalamu alaikum.